Good morning, everybody. I can still say that for about 29 more minutes until it's noon, at least here on the East Coast. Well, I can't say East Coast. I'm in Detroit. We're in the Midwest, but Eastern time zone nonetheless. I mean, look, these days recently, we've just been having roller coaster days, and it looks like today might be another one of those roller coaster days, right? We opened up around down 1% on the SPY from yesterday's close, ripped higher at one point, trading up on the SPY about 0.5%, and we are now back in the red. So just seesawing, going up, down, every which direction. So it's been a tough market to really gauge as far as like trying to identify any solid trends because we've just been bouncing around so much. But if you're more of a quick trader, in and out day trader, we've had that volatility and it's been good for quick trading. And lucky enough, I have a day trader here with me hanging out backstage, Mr. David Green. You guys know him. You guys love him. DG, he's going to join us. We'll be running through some of the trades he's looking at today, what stocks he's watching. If you notice the title of today's episode, How to Trade Amazon Options, we will be talking about option trades on Amazon now after the stock split. It makes it a little bit more affordable, a little bit easier to trade some of these Amazon options because in the past, when it was a $2,500, $3,000 stock, it just gets very expensive buying those contracts. So we will talk about kind of an updated strategy on how to trade some of those Amazon options. We will also be talking to Rob Roy around 12:30, 12:45. And then after that, we've got Dave Mazza from Direxion. So packed show today. Great Tuesday lineup on the show. We'll be talking about some other topics as well. Bitcoin down 5%. Overnight, we'll talk some gas prices and oil stocks, and we will talk about another interesting story that I have found in crypto that is I don't know if it's really a story yet. It's more of just something I have my eye on and I want to keep an eye out for. But let's go ahead. I'm gonna go ahead and play the intro, and we come back. I'll bring David Green on, and we'll get to trading.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How are we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a
breaking news. Mr. Green, how you doing?
What's up? Boy, you nailed it on the head, Aaron, when you said that this is not an easy market to navigate if you're thinking about doing anything long term, right?
No, it's like we're like the captain of a ship. In 1 second, the sea's calm, and the next second, you've got 30-foot waves coming at you, and you don't know whether you got to send the crew all underneath the ship for safety, or you got to have them all up on top helping you. You know, we don't know what to do.
Yeah, exactly. Well, let's start out with the Spies because we had a very interesting level this morning that we held, and it was pretty important. So I'll go to the daily chart, guys. And here it is. You guys can see, right? We pulled back, 416 a couple of days ago, 416 yesterday. We pulled exactly back, and we had a level right around 407.60 here this morning, 407.63. So if you look what we did this morning, okay, the low that we made this morning was 407.42. So that was a fairly important level to hold in the Spies this morning. I didn't expect this was going to come later in the day, but we did hold that level, and it was a pretty big level for us to hold. So that was a good technical level. We got a little stretch out to the outside and upside, and now we're just kind of sitting right in the middle of everything. Target has been a stock that we've kept our eyes on today. They had a bad announcement, right? What they announced last night, that they were writing a bunch of stuff down and their prices or whatever it was.
Yeah, I don't know. I mean, well, it's tough because you have Target saying
inventory
this.
Challenges.
You've got Microsoft saying what they said. So you got some of these big companies kind of giving warnings, and I think you gotta take those seriously. You gotta listen a little bit there.
100%. But I mean, it's done nothing but go up since this morning, right? If we look early this morning, this thing got so oversold. I mean, we were 13 points away from the closest moving average. We had a relative strength at about 10. And off this green bar here, that was a spot you could have grabbed a little early in the morning. We didn't because That was at 7:15 in the morning, but it's done nothing but go up since then for the rest of the day, basically. So we're looking, let me get a couple orders out here that we're looking at now. If we pull back a little bit. Target, we got our pivot point down at 152.60, which I really like. That would be down from 157.60. And if you look here, guys, when we went all the way up here, we just about hit our pivot point for the short. Now we pulled back $3. So I think if we pull back to the 152.65 level, we'll get a nice bounce off that level. Let's put a little order out. Target, 152.65. Yes, give producer AB some likes. Let's go. We'll
it's tough out here without Spencer. I'm doing everything alone. No, I'm just kidding. I got good help here with my man DG.
We'll cheat a little bit on the target if we get down at a 152.70. I looked at HUSA earlier today, believe it or not. Not a stock that we usually look at.
HUSA?
But, you know, it had a nice breakout on the daily chart, right? I mean, today it's up to 640. I was looking at it. They have some options. The only way I would ever play this is options. I mean, the stock spiked up to 16, but the daily chart looks okay now, right? And a big spike up. I was looking at maybe buying some 10 calls or something. That's the only thing I would do in any of these stocks, guys. You know, these little ones is maybe look for an option to do something. I would never buy the stocks. Yeah, but it's something that came up on our radar this morning that we're keeping an eye on. It's lunchtime. It's quiet now. Seeing if the spiders and the QQQs can break down a little more here also. So let's get an order out in the QQQ, guys. Down around this 306 level. So for those who are just joining and don't know what we're looking at here, obviously this is a chart of the QQQs. This is all the technical analysis that we put in our charts, our moving averages, our pivot points, our relative strength. If you look here earlier, guys, in the Qs, the relative strength got to 85. Check this out. 1, 2, 3, 4, 5, 6 green bars in a row. Relative strength of 85. That is telling us that the stock is going to come down at some point. And it gave a nice far from moving average trade up there. So now what we're looking at, coming down from 309.85, I think maybe if we test this 306 level, we'll hold that and get a little bounce from there. So I'll put a little order out in the QQQs at 306. And as a trader, guys, this is what we spend our whole day doing, looking for opportunities to buy and sell stocks at levels that make sense based on our technical analysis. And, you know, let me preface that by saying everybody uses different technical analysis. But this is what we use. You guys want to know, I can tell you exactly what it is, our moving averages and all that stuff if you want to know.
Yeah, and what I appreciate about what you're doing in your strategy, David, is it's not overwhelmingly complicated, right? Maybe for someone that's brand new here, they don't know charts that well, they see all these lines and they don't know what's going on. But when you really break it down, you've got these pivot points, you've got these moving averages, and that's all you really need.
Yeah, it's true. I mean, my charts tell me where to make a trade. I don't make a trade until my charts tell me. You know, I didn't really trust coming down to our 30 here because, you know, the market's coming in and we're just being a little more conservative these days. But if you look, it just bounced nicely off our, which, guys, I mentioned to buy a little at 306.80, right? Yes. So it bounced nicely off that 306.80 level and gave you a 50-cent trade. So this is what we're looking to capture during the day. You know, some people are going to trade. My beginning traders are trading 10 shares, 50 shares, 100 shares. And I have some people in the room that'll trade 2,000, 3,000, 4,000 shares every time one of our trades lines up. So this exactly held our 30-minute EMA and is now given a 60-cent trade. So I mean, think about it. If you're doing 1,000 shares, you just made $600. If you do that twice a day, you're making $300,000 a year. But we're going to throw some losers in there, of course, every once in a while because everybody has losers. But just technically, guys, we came down a long way. I avoided the trend, hit our 30-minute EMA, and gave us a nice little trade. So now I'm hoping we can spike all the way down here to our 65 and our 200 EMA and expect the same kind of bounce from that.
And then you just do it again, rinse, repeat, right?
Exactly. I mean, that's the beautiful thing about day trading. Check this out earlier today, guys. Okay, and this was pre-market, right around 9:30, exactly 9:30. Look what the QQQs did exactly 9:30. See the low it made, 302.69? That's our pivot point. It exactly got to our pivot point, 302.69. And in the next 15 minutes, it went up 3 points. So again, I don't try to think. I don't hope. I look at my charts that tells me where to make a trade. Two things are going to happen. It's going to work or it's not going to work. If it doesn't work, we have stop orders where we get out very quickly. If it does work, we try to get the most out of the trades that we possibly can. And that's what day trading is.
And then why is that so important to you that the move happens quickly?
because the quicker something gets to one of our levels, the better the chances that it'll reverse from that level. You know, if you see how fast the QQQs went down here, I mean, again, this is 9:30 in the morning. Nobody's doing nothing at 9:30. But when something moves that far, that fast, the odds are that you're going to get a bounce off that level. When you have 1, 2, 3, 4, 5, 6 green bars in a row, right? And a stock goes from 305 to 310, chances are that the next move is going to be down from there. And everything that we do is based on odds. So I'm not making the trades until the odds are in our favor of that trade working. It doesn't mean it's always going to work. But by waiting until the odds in our favor, we're going to make on a lot more trades than we lose. And that's all you can ask for. And then once you get in, it's just how you, and just as importantly, is managing the trade once you're in. Getting out quickly if you're in a loss and getting the most out of the wins that you possibly can. And that's it. And like you said, Aaron, it's rinse and repeat, rinse and repeat, rinse and repeat. We all want the market to go up over time. Everybody does, right? And it will. You know, I've talked about this with a bunch of people in the last couple of months or so. I don't think we're going back to all-time highs anytime soon. I think this is a little different than some of the other situations that we've been in. You know, COVID, when it first hit, we made all-time highs in 6 months from there, maybe even a little less. I don't even know. But there's just too many things going on right now that are not good in the world. And inflation being one of them, Russia being one of them, Korea. There's just a lot of stuff overhanging this market. And plus, another huge thing is that evaluations have become important all of a sudden, right? For 5 years, when the market was going straight up, you know, it was okay if Amazon was trading at a 300 PE. And it was okay if some of these other stocks had gigantic PEs. You know, we look at some of your firms and the T-Docs and Zoom and all those stocks. You know, nobody's buying them things with a 500 PE anymore. And stocks that stocks that make money are doing okay, and stocks that don't are getting decimated. So
I saw a stat the other day that like a year ago, Zoom had a higher market cap than Chevron, or maybe it was 2 years ago, and now Chevron has like a 10 times bigger market cap than Zoom.
I mean, you know, look at Zoom on a monthly chart, right? Stock was $588. So, you know, if at any point that you're a big Zoom fan, if you started buying this thing, you have no trading account anymore. That's the bottom line. Yeah. Right? And I guarantee when this thing was $588, there was nobody out there saying, "Oh, I think Zoom is going to go down to, you know, $100." So
what's crazy is now Zoom is at where it was before COVID was even a thing. I didn't know what Zoom was back then, and now we use it every day, and it's still it's back where it was before COVID.
Oh, just about. I mean, here was COVID in what was it, 2020, right? February
March 20, yeah, February 2020.
Oh, right here it is on the chart. It was around $81. Not close enough. It's close enough to where it is right now.
Okay, you're right. It got a nice little bump up to like where it's at. Yeah, 115. We'll call it right in February when. In March when COVID really started taking off. But still, I mean, at some point, and it won't be now, it'll be when the markets really turn around and there's more bullish sentiment. But some of these stocks that have come well off their COVID highs, I mean, I'm looking at Zoom right now, PE 27. It's like eventually they'll come back in favor, but it's not. I don't think it's going to be anytime soon.
I agree. You know, one that we looked at when it really got crushed down and we got involved a little bit was UPST. There's another stock that. Now let's go to the weekly. No, we'll go to the monthly.
Yeah, yes. I mean, at least Upstart is making money a little bit compared to some of these other companies.
Exactly right. I mean, same thing. It all happened during COVID, right? This was about $50. Went to 401. Now we're below that. But this is one that I like. If we can get another big smacky dacky down, maybe if it makes new lows at that 37, 38 level, they make money. The PE is probably still very high, but at least they're a profitable company, and I don't think they're going anywhere. And a lot of these stocks, look, you can talk about a firm, you can talk about T-Doc, you can talk about all those things that have done almost the same thing. Some will come back, the ones that are profitable, and some are just going to go away. Which, you know, that happens. It happens.
Someone in the chat,
things go away.
Someone in the chat is saying, Kevin's saying Tesla still has an insane PE. That's why I don't really love Tesla right here, right now, because if everything else, growth and high PE is coming out of favor, you got to figure eventually Tesla's got to, you know, come down to a reasonable valuation. But people have been saying that for what, 3, 4, 20 years? I don't know if Tesla was around 20 years ago.
All right, 10 years. But
10 years, yeah. People have been saying, oh, this is overpriced. I'm shorting it. It doesn't work out. But I wouldn't be buying it out here. I don't know about you, David.
No. And look, I've never been a Tesla trader, but you can't argue with the returns that the man has given you, right? And I think it's more of a cult than anything else. If valuations mattered, this thing would be trading at, $100 or $150.
I'll
But
tell
again,
you
I
what,
look at my technicals, right? This is a monthly chart, and we got down to around, 658 was a little level. We broke that by a bit. So this is an important level. Again, if we get down to that 650 level, and people always laugh at me, could I see Tesla trading at $436? Absolutely. Absolutely.
I'll tell you what, I am going to buy some. I say cheap, but they're probably not going to end up being cheap. But I'm going to buy some kind of YOLO puts ahead of Tesla's next earnings report, which I believe is like the third week of July or something. But it just
720.
They announced last week that they're laying off 10% of their staff. Does that scream that demand is high for their cars right now? No. And then China was locked down, and China's been a big place where they've sold a lot of cars. So if China was locked down and people weren't buying as many Teslas there that quarter, then I would foresee. Well, like I said, it's gonna be a YOLO put. If I buy, a few $100s worth of puts and the Tesla goes up and expires worthless, oh well, it was a little bet I made. But if it goes down and I make some money, great.
Yeah, here's the problem with Tesla. There aren't going to be any cheap puts.
Exactly. Yeah, I know. It's going to be.
First of all, got to wait till we get closer, right? It's not till July.
Right. I just have that on my radar. I'm going to wait until like that week of and start maybe buying some puts that expire that Friday.
When is it? The 22nd? So we have July 22nd, but you can't do anything now. It's 45 days away to look at the price.
No, now. Oh, wait. No, 720. So that's actually on a Monday. That's bad for me because then the puts are going to be more. Oh, my Atlanta. All right. We'll figure it out.
It's true. You want the earnings to come out on a Friday or a Thursday. So you
Thursday, and then I'll buy the Friday puts. I'll buy the puts the day before when there's no
exactly.
Even there's no time left.
All right, market's coming in a little bit more here, guys and girls. We have a little bid down on the QQQs at 306. Another thing that's very important about trading, if I don't know how many of you guys, first of all, how many people are here, Adam?
We've got about 291 people.
All right. So everyone, and if anyone is actively trading, just put in a 1 for us so I can get a gauge. Again, we talked about this before. Speed is the most important thing. So I do want to buy the QQQs down here at 306 for a trade, but if it kind of just meanders around here, it's not going to be as good. I want the smackdown from 307.50 to 306 so that we can get that bounce 50 cents to $1 and just get out of the trade. So the longer something takes to get to one of our levels, the less effective it's going to be. So we got a lot of people who are actively trading. There you go. Excellent. All right, so let me ask this, guys, if you don't mind. How has everybody been trading in this market? Are we finding it easy? Are we finding it more difficult than ever? Because I'm doing this for 35 years, and this is more difficult than ever as far as I'm concerned.
I was gonna say, if someone in the chat is saying they've been it's been easy for them, I'll call them a liar.
Yeah. Like I said, I'm doing this for 35 years, and it has not been easy. There have been times where it has been easier, no question about it, but this has been a tough market to navigate. It's just, and volatility is usually good for us, right? Profit almost every day. That's great, StockX. That's beautiful. Volatility is good for us, but when you see the QQQs go from 302 to 309 in an hour, that's a little more than volatility. Decent, difficult, but decent returns. Yeah, that's good, guys. That's good. Yeah, I mean, net, we make money. That's the bottom line. We don't make money every day. We don't make money every trade. But if you're consistent and you follow all the rules, whatever your rules are, and I never tell anybody, that our method is the best. Whatever your method is, it's good. All right. Do we still like let's look at a couple of things.
Yeah, Lord Byron, I hear you there. He said it ain't last year. I'll say that much.
No,
it's not the market of the last 12 years. I mean, we really only had you had the COVID. Well, I guess there was a 2018. There was a kind of, I think, like a 15% drawdown, but we recovered pretty quickly from that. Then we had the big COVID drawdown, and then, like David said, within 6 months we were at new all-time highs. If you look at from 2009 till now, we've mostly 99% of the time just been in a straight bull market. So now it's a little bit trickier.
Yeah, I mean, here's a monthly of the spiders. I'm going back as far as I can And we've had, some events. But if you go back just to the last couple of years, right? I mean, for the last 2 years, we returned over 40% in the market. It was like 44% for the last 2 years in the market, right? We went from 290 to 480. That's like 45% in 2 years. So, now we're down what? What were we down at our worst? 13%? I think we were down 20% for about 5 minutes at one point in the spiders when we got to 380, right? I think we were down exactly 20% for about 10 minutes when we made those lows. So here we are now. We're probably, down what? 12, 13, 14%. And it's just going to take a lot longer this time than it did last time. So look, we're working through a lot of stuff, as we said earlier. All right, guys, cancel these orders. We're bouncing a little bit. Markets working through a lot of stuff and a lot of uncertainty. And the one thing that the market does not like is uncertainty. You could look what happened when they actually raised rates, whatever that was, for the first time, right? The market took off like a rocket ship that day or the day after. So we can handle all that. We can absolutely handle all that. But uncertainty is a killer in the market. So look at the SPYs, guys. I mean, the QQQs, right? So we got down to our VWAP right around 306.40, and look what happened. So imagine if we could have got down to our 306 level, this same bounce would have been happening. If we got to 306 and there's 50 cents and $1 out of that trade. I don't chase. If things don't hit our levels, we wait. We wait until they hit our levels. I can't tell you how many times we miss trades by a penny. And then they go and work in our direction. But you can't. I don't chase things, and we just sit and wait, and we be patient and disciplined. Buy penny or two in Luna Classic. No, thank you. I will look at Bitcoin for you guys, though. And we kind of settled in a little bit here. Now we've been on both sides of this daily. If you look at the weekly in Bitcoin, it's right around 28.5. So I guess that's an important level to hold. If we get down around that 28.5 level. And then monthly, we almost did this, guys. If you look at my monthly chart, we almost hit that 25 grand or whatever it was that day. Missed it by, a little bit. And we had a nice bounce off that. If things get really bad, I think it can go to 18 grand. That's a 200 EMA on the monthly chart. And I'm not a big, the way we will trade that is with Biddo. Aaron, if we have any questions or stuff, I'd be more than happy to answer it for anybody.
Yeah, I'm checking out the chat right now.
Biddo is the ETF that follows Bitcoin.
Biddo, BITO.
BITO is the ETF that exactly tracks the price of Bitcoin. If we look on the same chart, monthly chart, it's the same exact thing. Boom, 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 boom. It's actually a lot worse, but that's because this is an ETF. But if Bitcoin ever gets to a level, that will be the way we do it. Microsoft, hold on, guys. Let me see. So for those of you who don't know, I have a private trading room. I hang out with my traders. I only have about 40, 50 people in my room. It is very private. And people in my room will post trades all day long, and we trade together. Everything I do is posted live in real time in the trading room in a real trading account. 269.70. No, too close in Microsoft. That don't work. And when people pop stuff in, I have people with a lot of experience, people with a little experience. And I will go and we'll vet the trades and we'll see if they're good or not. Same thing with Apple. 146.70 is way too close. All right, what are your settings? DG is the man. He will keep you from losing money and keep you from losing the money he helps you make.
Oh, shout out Jim Stocks. I miss you, Jim. Jim's
I miss you too, Jim.
Jim's from my neck of the woods in Missouri. What do you mean you miss him? You took him from us. He was in our chat every day, and then he joined your room, and now he's not around anymore.
Yeah, well, he's doing his own thing, which is fine.
Well, good for Jim.
Look, a lot of people come to me, they hang out for a month or two, and they go do this on their own, which is great. That's like graduating. That's beautiful to me. That's what I want to see, right? NVAX, I think, is still halted, right? They're doing something FDA, waiting for some kind of FDA approval or something, or they're going to decide whether they're giving it to it or not. Okay, let me give you guys the exact technical analysis that I use. All right. So we have 5 moving averages. Let me see if I can get something where they're all in line and make it easier for us to see. Probably not going to be easy to find right now. They're not, but I'll just go over them for you. So I use a 9 EMA, a 15 EMA, a a 30 EMA, a 65 EMA, and a 200 EMA. 9, 15, 30, 65, 200. Obviously, when a stock is hitting any of those up or down, we look to see if we want to make a trade if the stock has moved enough. Also use pivot points. These are the little dotted lines you see here. A lot of times when we don't have a moving average, we'll have a pivot point that's telling us to either get long or get short of stock. And I use relative strength. Relative strength, we got a lot of trades from because for those of you who don't know, I use a setting of RSI of 20 and 80. Okay, when something gets over an 80 RSI, we look to get short. When it sets up, and you can see here we had over an 80 RSI in Apple, and it gave a nice pullback of $1. If we look at QQQs, they did the same thing at one point, all at the same time. QQQs had an 85 RSI. That just tells us that it's getting ready to get a turn, and then we'll go to it and look and try to pick off a little trade off of that. That's all the technical analysis we use. Try to keep it very, excuse me, try to keep it very simple. A lot of people have a million things in their charts and can't even see where the stock is trading. Limited had a nice uptrend today. It's in one now. Yeah, very nice. BABA and XOM. XOM got stretched out this morning. I'll show you that in a couple of minutes. All right, so look at BABA here, guys. Okay, same thing. Look at the RSI. We almost got to 80, it pulled back. But this is our 65 EMA. It got down to 100,048 cents after having 7 red bars in a row. And there's your 50 cent and $1 trade. Boom. That was 150. Just gave you almost $1 on a trade, bouncing off nice support level. So BABA was a nice buy when we got down to that 101.50. Tesla RSI right now, Flatsky, Watsky. Very rarely in Tesla are you going to see an 80 or a 20 because the stock would have to be so stretched out for that to happen. It just doesn't happen very often. But look, when we got up to our pivot point here, guys, around 718, set up for a little short and pulled down $6. We'll trade Tesla very, very small, and I'll look to make $5, $6 on very, very small amounts of shares. PRCT, hold on, PRCT diving. Whoa. What is this, guys? Biotech is my guess, and I don't even know what it is.
What's the ticker?
PRCT, biotech stock. So it just went from 41 to 37. And check this out, guys and girls. Does a chart know if there's news out in it or something? Of course not, right? But we had a pivot point at around 36.80, went a little bit below it, and even gave you a 50-cent trade off of that. Yeah, so we got 34.75, and then daily, Sal, you're saying is 35. Let's go take a look. Daily is 35. All right, good. Let's put a little marker down there. Maybe we get a far from moving average trade if it gets smacked down like that. But here's a stock, guys. I never traded before. I never heard of it before. I have no idea what they do. But we're going to put a little order out down there. See if we get down to that 35 level. It's our pivot point. We can look for a far from moving average and all sorts of other stuff if we get down there. And then I'll just put a little feeler out. I don't want to commit because there's news out. But if we get down to that 35
You don't even know what this stock does, what they do.
Yes.
Who cares? It's got a chart. We can trade it.
That's it. That's the whole thing. That's what people
Oh,
don't
Eric Taylor in the chat wants to look at Airbnb. I haven't looked at that stock in a while, actually. I think I like Airbnb long term. I just think it's part of growth that's out of favor right now.
I agree. Let's take a look at the chart. We're just looking at, yeah, PDD is a good double top, Sharon. If we get to $60, let's put a little.
Airbnb actually doesn't move that much. It's not very volatile. It doesn't look like.
That's good, especially if you like it a little longer term.
I guess. I guess it's good. It's not fun for trading options on.
ABNB. So we always go to daily or weekly to get a little sense. Let's see where we are daily. Hey, finally. All right. So, you know, if I was trading this, we got above this, like, let's just call it 120. That was decent. So maybe we're doing a little nice flag here now, right? So if we can hold, I'd say like the 118 level, longer term, and then get above 126. Let's go to weekly. Now, weekly's horrible, but we're starting to get at least a little bounce, right? And monthly's horrible too. When's their next earnings? Let's look at that. Not for a while. Look, the shortest term chart, which is the daily, looks decent. Decent. You know, if I was in this, I'd probably have like a 118 stop or something. Decent. Nothing crazy there. Tesla making moves to the upside. Hold on. PDD, we got a double top in. It's good. Snow. So what I do, guys, all day long is I just vet trades in the trading room. And if I see some, I put them up there that we can trade also. Anyone who wants, guys, I know there's a couple hundred people here. Free trial into my room for 5 days anytime you want. You just send me an email. Snow 133 would be good. All the oil stuff. I filled up my car with gas this morning. $66. $66.
Yeah, what are you gonna do? Not put gas in your car?
No, you have to. But you know, when they tell me inflation is transitory and maybe we've seen the peak of it, I don't know about that. I mean, gas is the highest it's ever been down here. So, did Tesla approve a 10-for-1 split today? Really? I didn't see that.
No, I didn't see that either.
Email Matt. Aaron will pop it up there.
dgreen927@yahoo.com. I got you. It's right here.
Yeah, anyone who wants can come hang out with us for a week. Doesn't cost you anything. Yeah, Exxon's been in a beautiful trend all day. Check this out. Just broke out of the base. Definitely a stock that you want to be long. So when stocks do something like this, guys, I'm always looking to buy it on pullbacks. I don't want to be short. I want to buy stocks. CPI is ex food and gas. Yeah, I get that. And don't we have that coming out Friday? We have something coming out Friday.
We have CPI on Friday, yep.
Yeah, so there you go. Last time we had the PCE on a Friday, the market went up like 1,000 points. It ended up coming right back in, but it went up 1,000 points. So we'll watch that very closely on Friday. I'll tell you what I'll do on Friday. Thursday, we'll look at some SPY options. You know, we'll do some what we call lottery tickets for Friday morning. And I'll go up or down, 8 points in the spiders. Maybe we can get some cheap ones. And then if we have a giant move off that, we can make a couple of banana skins. Tesla's moving up, so I like a double top in Tesla, guys. If we get up to that 719.29 level, that's up $6 from here. So we have a trade, guys, for anything a stock can possibly do. We have, if a stock makes a double top or a double bottom, we have a trade. We have our regular moving average trade where we'll use our 65s and 200s. We have a trend trade where we'll use our 9 and 15. So there isn't anything a stock can't do where if something happens, we can be set up for a trade. That's all you can ask to. Weed stocks? Ugh.
Yeah.
No.
No.
Absolutely not. Now, I'll tell you, weed stock's horrible and Beyond Meat horrible. Beyond Meat is a stock that every time they came out with something with McDonald's or this or that or this or that, it did this. And it spiked up and it spiked up and it spiked up and it spiked up. And every single time it just made lower lows and lower lows. And you don't want to know why, guys? Look at their earnings. They don't make any money. All they do is lose money, right? So you can have the greatest idea in the world and, everyone wants to switch to Beyond Meat. Doesn't mean the company's any good. It's a piece of what. So I don't have any opinion about. Look, I have opinions about long-term stocks. That's a different story. And
what about car insurance? Do you have any opinions on the car insurance? I have to get a new.
Give me some symbols.
I just meant like the actual companies.
Oh, you want to know if I know a good one?
I don't, because I've been just paying for my car insurance from my policy back in Missouri, but I think because I'm leasing my car, and I think they said you technically are supposed to get a policy in Michigan if you're up there for 6 months out of the year.
That makes sense. I've had Allstate, I think, for 30 years.
Okay.
Yeah, literally.
My buddy
I've had
actually
Allstate since I'm 18. I'm 60, so that's 42 years I've had Allstate.
Really? All right, I'm going with Allstate then. My buddy works in the investment arm for Allstate, and he was telling me this. I go, "What? Allstate has an investment arm? I didn't even know that."
Why not? Everyone else does.
I guess so.
What do you guys say? It was something else. Oh, someone said it would be good if Peter Tutwin was here with me. You guys know that Peter is my partner, right? We do everything together. We actually, and it's coming out, I think, next week. We curated a new course with the New York Institute of Finance. It's going to be an accredited course, which means you will get a certificate if you go through the course and answer all the questions properly. It's the first trading course in history that is being accredited. I don't think you can use the diploma for anything more than put on your wall, but It's the first accredited course in history. It's 9 hours long. New York Institute of Finance. It's going to be registered. It's going to be released, I think, in the next week or two. So you guys want to check that out? I think it's only like $500.
I don't even
And
know.
everyone gets it.
That's a good point though. Are most of these all states publicly traded, right? No?
Yes.
Yes. Are most of them publicly traded though? Progressive?
Yes.
Okay, yeah, most of them are. Why are none of the big accounting firms publicly traded?
It's a good question. Who knows? They don't
Always
want
wondered that.
They want you
Why
to know
there's
how
no
much money they make.
Deloitte, KPMG. But yeah, if anyone would be able to do their books, it'd be them, right?
They don't want you seeing theirs though.
I know.
Someone just had Peter Tuchman's a good guy. Yeah, he is. K-Buzz says, do you trade the news? Of course. Of course. We have to be cognizant of everything that's going around us all the time. Look, before I get into any trade, and you guys should look at this too, right? Before you get into any trade, always look at what the overall market is doing. If the overall market, for some reason, the spiders are getting smacked down, I'm going to be less likely to buy stocks, right? And if it's going up like this, I'm going to be less likely to short stocks, unless they get to levels that's set up on our charts.
Yeah, and we have traders all day that are using our live news scanner here on pro.benzinga.com to trade that news. I know David's on there as well. And if you guys have not checked it out, you can just go to this link. It should be in the description as well. You get a free 2-week trial. You don't even have to put your credit card in or anything. You can literally just get free access to one of the most comprehensive live news scanners out there, and then just see if it helps. See if you're making some money off of it, great, then sign up. If not, then it's not for you.
Yeah, let me talk about that for a minute to everybody else in here, okay? I don't think I can trade without it, guys. And if you get one thing 30 seconds quicker than somebody else does, you can make a living on that sometimes. Seriously. It is the best news service out there. Scanners, they have a million things that you can use. I couldn't trade without it. I wouldn't want to trade without it. It is the best. So, guys, certainly go for a 2-week free trial. You got nothing to lose, right? Silly not to do it. So definitely do that. Let me just check the 2 stocks we have out there. I think we're kind of just slowing down. It's lunch. Let me check the PRC too. Guys, when we take lunch, we walk away from machines for an hour and a half, and we don't care what happens. One of the worst things that you can do as a trader is overtrade. That's it. Wait till things are set up, whatever system that you're using, and don't be in a hurry. Tesla delivery numbers will be down. What do you think of the stock in the low 600s? Again, I'll go to my weekly chart for you guys. And
wait, K-Buzz, do you know
514?
Does the delivery number come out with the earnings, or they do that separately? I forget how Tesla does it. I feel like they might put out the delivery number separate. So maybe I try to buy some puts ahead of that if it's different. David, I just realized it's almost 10 afternoon. I don't want to take up too much of your time. You're more than welcome to hang out with me as much as you want, but if you got to run, you got to run.
No, I don't got to run yet.
All right.
No trades are setting up. We can hang out and talk a little bit.
Yeah, it's lunch. And Jay Rice, by the way, he says because Enron bankrupted Arthur Andersen. So I guess maybe Arthur Andersen used to be publicly traded, and then after that they were like, hey, maybe we'll just stay private.
That could very well be. All right, so let's look at Tesla technically. 660. That's a big level again. We tested it. We went a little bit below it. And then the next level I got below that is 514. Write them down. 660, 514. And then below that, I think we got like 420 yet. And, people sometimes they say, oh, you're crazy. The stocks will never get to that level. 436 is below that. Look at some of the stocks we talked about earlier. And not only have they gotten to those levels, they've gotten decimated. Yeah, we can talk about Amazon for a minute because I like Amazon long-term. One of the ones that I like long-term. And by the way, this has turned into a pretty good trading stock now. So I definitely keep my eyes on it for day trading. It's got a great spread. It trades a gazillion shares of stock. So it's one that we have on our radar since it split. And obviously, it's absolutely dead right now. But we'll go weekly. Weekly we got up to this one. And this was another thing we looked at the other day. This was the first day of the split, I think. Right? Yes.
Yesterday?
I think so.
Yeah, yesterday was the first.
Was Monday. So check this out, guys. And we shorted this stock yesterday. This was the first day of the split. I think it was like 123 when it opened. Look what happened when it got to our 200 EMA. It was right around 129. Check that out. I mean, to the penny it got there. This was yesterday. It happened during the day. Got to 129. That's a big move. And it was a lot of excitement about jumping in when after the stock split. It's usually not the right thing to do. These things, and I said that before it split. You don't want to run in here the first 1, 2, 3 days. So it got to 129, which was beautiful resistance on our 200 EMA, and now it's pulled back below that. So that's what we got to clear. I'd love to get this thing below 100 at some point. That would be nice. But Amazon I like long term. I think that great.
After something I thought interesting that I saw after Amazon's last earnings report, which of course wasn't great, was Goldman Sachs, or I guess at least some analyst there, was doing some valuations of the company, and they basically valued the non-AWS parts of the business, the Amazon Web Services, like the actual online marketplace shipping things to your house. They basically valued that part of the business at zero. Like Amazon doesn't make a lot of money off that part of the business, which makes sense because if you order a cheap phone case for $12 off Amazon and it gets to your doorstep the next day, how are they making money on that?
Yeah,
they got to pay for the shipping, they got to pay for the whatever. So it's but AWS is just an absolute monster. I mean, it runs like the whole internet basically.
Yeah, I like someone made a comment, never say never. That's exactly right, guys. Never say never. Anything can happen in the stock market. Anything can happen in any stock.
I always hated it. When I was a kid, they would say never say never, and then they'd say never give up. And I was like, which one is it? Are we supposed to never give up or never say never?
Yeah, I mean, under 100. LOL, under 100. This thing can go under 100 in 2 days if the market gets crushed down here, right? I mean, easily.
How are we looking on the Qs, by the way? I've still got my put.
We're dead flat.
I've got my puts. I've still got my puts on, but
yeah, we bounced a little off the lows, and we're just sitting in the middle of everything with no volume, and there's nothing going on. Absolutely dead. Look, it's lunchtime. This is what happens when it's lunchtime. But yeah, there's no such thing. One saying that my father always told me that I kind of try to live by, and it really has nothing to do with this, but I think it's good. Is I believe none of what I hear and only half of what I see. That's it. I don't listen to anybody else. I don't trust anybody else. Look, if you guys are actively trading, I'm sure you go to TikTok and all these other places where you see people advertising that they turned. I like one guy. This was the best ever. He turned zero into $5 million trading. And I'm like, how can you start with zero? You can't make a trade if you have zero. At least say you started with $100, right? But you see that on TikTok all the time, guys. These guys are just stay away from that. All right. Don't get caught in FOMO or hype in any of these ridiculous stocks. I have people who are still long AMC in the 30s, 40s, and 50s that, they're hoping and praying that someday it goes back up there. I hope it does for them. I hope it does, but I don't think the company will exist in a year and a half or 2 years. But whatever. Don't get caught in the hype. Do your own thing. Do your own research. Do your own charting. And don't listen to anybody out there, because I love the guys that have the automated trading systems. And I see another one, all over the place. I have an automated trading system. Guys, it's returned 780% in the last month or whatever it is. Number one, there's no such thing. Okay. And number two, if someone had an automated trading system that actually worked, do you think they would share it with anybody and try to sell it for $22 or $19.95? I mean, think about that, guys. There's no such thing, especially in this market. It's impossible. So don't get caught in any of that bullshit out there. This is hard work.
And don't take it from me. Take it from David. He's been doing this for 12 years.
You don't have to. I'm doing it for 35 years.
What? So that means you must have started trading when you were 5.
I am 60 years old.
I don't believe it.
Started working on the stock exchange in 1985. I retired after 15 years. So I was 39 when I retired. Traded on my own for a little bit. And I've been doing the teaching part for the last 15 years. You know what it is? I can't do nothing. It's just not in my DNA. And
you're not a big golfer. You're not a big golfer, huh?
I'll play once in a while. But again, this is the only thing I've ever done my whole life. This is it. I've been trading since I was 23 or 24 years old.
That and buy car insurance policies from Allstate.
And I love it. And I'm not going anywhere. This is just what I love to do. Let's explain this. Someone asked, how does the VIX work in reality? Hold on one sec. Let me just check the market, see what's going on. We're coming in like a hot potato now, guys. Let's check out the Qs. All right. They're coming down from 307.30. All right. Quickly, guys, if the Qs go to that 306 level, we'll try. So we're getting a big bop down now. So, I don't love it as much as I did before because we came kind of close. And who the hell knows what's going on in this market? We've seen these things go absolutely bonkers at certain times during the day. On this pop down, guys, 306, and I'm going to do it small. Everyone do it small. Get there. And when I see a little bounce from here at all, I'm going to cancel my order. Excuse me. Because again, I want it fast. I want it fast. I want it fast. Because if we spike down to that 306, we would have got the same bounce. So no order, no trade. We ain't doing it anymore. We wait and see what happens.
Oh, wait. So we got down. Look at that. Wait, I'm trying to zoom in here. I'm going to go full screen on the chart real quick. That wick got right down there, right to that moving average almost perfectly. Maybe cheated a tiny bit and then bounced.
Correct. So now if we go down there the second time, I don't like it. Because I only do a trade the first time something hits my level. Second time, I will never do it. Because chances are, if second time something's going to hit, it's going to go right through it. Who's had his best start in his last 5 years? Oh, that's.
I was talking about, we were doing some sports investing yesterday, talking about bets, and I bet on the Angels, who are on an 11-game losing streak against Michael Wacha, a pitcher, and he, because he's not good anymore. Michael Wacha used to pitch for the Cardinals. I used to watch him pitch all the time, and he's not that good anymore. And then he went 9 innings, no runs, pitched a complete game shutout. I was like, what the heck? It's his best start in 5 years.
He lost 12 in a row, right?
Yeah.
Well, look, nobody, well, I shouldn't say nobody. I don't know many people who make a living gambling.
No, you can't. And that's what we were talking about yesterday. I made, it was a $25 parlay with 5 picks on it to win like $800. And I was like, think about this. I was like, think about this as a way out of the money call option that expires tomorrow. It's 99% of the time going to expire worthless. But if it hits, great.
It's a lottery ticket.
It's $25. I'm not putting hundreds of dollars on games that often.
We'll do that with options too. I'll look at, like Thursday, I'm going to look at UVXY puts and calls. And someone asked about the VIXI and the UVXY, so we'll talk about it for a minute. If we look at a monthly chart of UVXY, UVXY is built to go to 0. It is the fear index, okay? When the market goes up, this goes down. When the market goes down, this goes up. We know that the market always goes up over time, so this thing is just built to go down, down, down over time. I will look on Thursday night for options in this. Just, maybe we'll go 10 or 16 and throw some lottos at it to see if we get a big giant move in the spiders on Friday or the market. But do never, ever, ever buy UVXY or VIX or any of those things for a long-term trade, okay? They are built to go down because the market always goes up over time. So don't ever get involved in these things long-term. Actually, the VIX is a little better than the UVXY because the UVXY is a triple index. This one isn't as bad. But again, when we had the big, this was COVID, right? This thing spiked up to 80, and here it is back at 25. So don't ever buy those long-term for your trading account, VIXI, VIX, any of those things. How do we sign up for private on a 101 coaching room? I don't do one-on-one coaching. Just send me an email and we'll get you into the room. Whoever admin is.
I put the email up on the screen.
Yeah. Come into the trading room, guys, and then we can take it from there. I actually have my boot camp next week, guys. So anyone who's coming into the trading room next week,
does that mean you won't be able to come on here with me on Tuesday?
No, I'll still come on.
All right, beautiful.
Next week is my live boot camp where I teach the entire course live in my room over the course of a week. It costs $500. Not cheap, but $500. You're going to learn everything that I can teach you in a week, and basically my entire course. And you get a month in the room with that also. So, but anyway, come in the room first the rest of this week, and we can talk. It's easy.
Beautiful. All right, email's up on the screen. dgreen927@yahoo.com. David, it's always a pleasure to get you on because everyone out there, like you said, people out there on TikTok, whatever, we all need to hear from people like you that have real experience doing this, that don't, mince words, don't have some hidden agenda, are just showing us what you're doing. And like you said, I mean, you're upfront about it. You're candid about it, saying this has been a hard market. You've been doing it for 35 years. This has been difficult.
Yep, 100%. Thanks for the opportunity. I appreciate it. You guys have a great week. Guys,
You as well.
I already see a bunch of you guys email me, so I'll see you in the room in like 15 minutes.
Beautiful. All right, David, talk soon.
Thank you.
All right, guys, we are so lucky to be able to get David Green on this stream every week. I see someone in the chat saying he's the GOAT, the greatest of all time. There's a lot of great traders, investors, but David's pretty great. We'll throw him in the GOAT category. All right, guys, let me know what you guys are watching. I still got those Q puts open. They're not, let's see. Oh, they're doing well now. I guess the Qs took another downturn. Yeah, we're down about 0.2% right now. But let's go ahead and talk about Amazon for a second. I'm going to go ahead and pull up my Robinhood, and we will look at the Amazon options chain, because if you guys have been watching this show, I wasn't not trading options on Amazon. I still was. I was just doing it in a different way. I was utilizing spreads, which makes it a little bit cheaper to trade an expensive stock. So I'll show you real quick with Google what I'm talking about. So Google is a $2,300 stock, which is pretty analogous, pretty close to what Amazon was at before it split. So right now, if I wanted to buy calls that expire this week on Google, even if I went out of the money, say, I said Google's going to go up 3% from now, Tuesday afternoon to Friday, that's going to cost me over $1,300 to buy this contract, right? Max cost $1,300. But what I can do is now I can sell the higher put. So now I have a call debit spread. Now it's $1.25. And if Google gets up to there, in Robinhood, this is actually cool. I don't know how other brokers do this, but Robinhood makes it easy to see exactly what your profit loss will be depending on Google's stock price at expiration. So for this example right here, if Google ends up going up 3%, which is what I would have needed anyway on that $1,300 contract, then I would get $380 back for an $120 trade. Now, if Google goes up a little bit and it doesn't meet that price, then you're out the $125. That's kind of the downside to the spread. Whereas if you buy the call outright and it goes up, then you can't. Then you can still sell it for more. But with the spread, it has to get through that threshold. So if you're doing spreads, you have to get through the threshold you're aiming for. Whereas if you just buy the call, it could just go up a little bit, and most likely, more times than not, you can sell it for more than you bought it for. So I like doing spreads on stocks like Google, where it's too expensive for me to do those outright calls. So if, say, Google was reporting earnings tonight and I was really long and I wanted to buy some calls, I would do it through a call debit spread as opposed to buying the outright calls. And that is how I was trading Amazon. But now that Amazon did its split, the contracts become more affordable. So now if I think Amazon's going to go up, 2.5%, that's my break even here, I can buy these calls for $1.75. So now there's really no reason to do those spreads unless, of course, you want that. And then, yeah, so many beats. We could do butterflies as well. We're actually going to get Options Mike on or Chris Capri later in the week to go through some of those more advanced option strategies, because I typically do not do those. NA is asking, only watching SPY. Do you prefer playing Qs for options? I think for SPY and Qs, they're both so. For anyone who's new to investing, new to trading, SPY is just the Spider S&P 500 ETF, so it directly tracks the S&P 500 composite. The Qs is basically the same thing for Nasdaq, but I think instead of actually tracking the Nasdaq composite, it tracks the 100 biggest. So basically like the premier top 100 Nasdaq stocks. Both the SPY and the Qs have midweek expirations for options, so I can buy options that expire tomorrow. That's actually what I did with my QQQ puts that I bought today that expire tomorrow. Let's do a quick check on those just while we're talking about it. All right, so they're up 26%. It wasn't a big position. I'm up $52 on it, but I'm not going to sell them because I'm going to hold them on overnight just in case we get. Because look, I'm still net long. Like I'm invested through my retirement accounts in my IRA, and I'm net long, especially a lot of the same stocks that are in the queues, Apple, Microsoft, whatever. So if the queues are up tomorrow 2%, I'm not going to be upset. I'll lose out on let's see, $178. So I bought 2 contracts at 89 bucks. So if the queues are up and these contracts expire worthless, I'm still happy. If the market's down tomorrow and I make money off these puts, great. It doesn't affect my long-term positions anyway. I'm going to be in them for years and years and years. So as far as trading options on the queues opposed to the SPYs, I do think you'll get a little bit more movement out of the queues. I think typically if you see the SPY up 0.5%, the queues might be up, 0.75%. Typically, it's not always the case. There will be days where the SPY is up or down more than the queues, but a lot of times tech, which is where the queues are, the queues are basically all tech. Tech is oftentimes your either biggest laggard or your biggest leader of the day. So when it comes to it, the queues, I would prefer to trade the queues for options over SPY. Someone brings up a good point that the SPY is the queues are very much dependent on Apple and Microsoft, but that's really not any different from the S&P 500. I mean, Apple is the biggest weighting in the S&P 500. You have Amazon, you have some of these other big stocks, and that's been something that people have been pointing to for a while, essentially, that just the FANG stocks, how the weighting of the biggest stocks is becoming very much historically kind of overweighted. That in the past, say, if you had more of an even distribution, a wider market breadth is another way to describe it, whereas now we're basically all dependent. Is Apple up today? Okay, great. Then the S&P 500 is up today, or vice versa. It's not always true, but it's been how it's been working. So I don't think you can really go wrong trading options on the queues or the SPYs, but that's why, for example, I bought the Q puts today instead of SPY puts, because I think if we're down tomorrow, it's going to be more likely that the Qs are down more than the SPYs. Yeah, Shiny, the Qs, I would say, are affected by cryptos, but I would say so is, like we saw Bitcoin down 5% overnight, and then the stock market was, I don't think that's why the market was down this morning, but there has been correlation between Bitcoin and the overall markets, whether you're talking Qs, whether you're talking S&P 500 or whatnot. So many beats at Aaron, you're a genius picking options. I get lucky sometimes. I would not say I'm a genius. I'll show you my Robinhood all time. I've made money. I don't know why it says I'm up 6,000, but then it says negative 200%. I don't know how they're calculating that. I guess probably because I've pulled money out. But I mean, look, I had April 2022, so 14 months ago, I had 15 grand in here. Now I have, look, I'll go to my last year. I've made some bad options just in the last few months. Look, April 20th of this year, I was at 10,000 and I had some really bad. So if you go back and look at this week, the April 20th week, that was when that Friday we were down like every day that week from Wednesday on. We were down like 2% or more on the SPY. That Friday, I think the S&P 500 closed down more than 3%. And I kept just trying to play a bounce. I was like, oh, we got to bounce here. We got to bounce here. And the market just kept moving lower and I lost a lot of money. And then like the last week, I got lucky last week and had Tesla puts going into the day where they announced they were laying off 10% of their workforce. So I don't think, at least the way I trade options, it's not the way that Rob Roy trades options. He'll look at this and say that's just luck gambling 100%. The way Rob Roy trades options is actual investing a way that's sustainable where you can actually make money. So I appreciate the compliment, so many beats. I just don't think it's true. I get lucky sometimes. But with that said, let's bring on Rob Roy, who is going to talk about trading options in a little bit of a different way. So let's give him our special intro, get my man on, and see what he has to say. Mr. Roy, how you doing?
Aaron, how are you, sir?
I'm good. So am I, the way I can't take credit for the way I trade options because you'd look at me and say I'm just out there gambling.
Well, Listen, everybody has a different style, a different way that they do it. I am very methodical. I'm the guy that goes on YouTube and I'm ticked off if I'm watching a video on anything, how to repair a car, and they don't give me every single detailed step. That's just the way I have to do something. I can't get it in my brain any other way. Not everybody trades them that way, and that's okay. There are different systems, different styles, but as long as it works for you, that's what counts.
Well, it works for me until it doesn't, and then it'll work again, hopefully. But I do want to make the point that like the way that I'm trading options in this Robinhood account that I was just showing, that's the point of that account for me, is just to have fun and mess around with. I have like my real investment accounts where I'm basically just buy and hold like long term. So whenever I put out like like when I bought the puts on the QQQs today that expire tomorrow, it was like, yeah, I'm going to spend $180 on this puts. If they expire worthless, okay, that's fine. Like, so I go into it all with the expectation that it's a very realistic possibility that when I'm buying those calls or puts, they will expire worthless, but I hope they don't.
And that's the way you really have to go at any trade, right? Because when you're trading an option, when you own the stock, it doesn't have an expiration date. When you're trading weeklies, which is what I primarily trade, it expires this Friday. One bad hiccup in the market, one thing that kicked in from the war or from gas or from some politician somewhere opening their mouth, and the market can shift dramatically against me, and that option could become worthless or pretty close to it. So to some extent, you've got to look at it that way. But of course, you want to protect yourself that in the average scenario, that doesn't happen. That is where you start off with an investment and it becomes a trade, right? You're holding on forever and watching that $40 option go to 30 and then to 10 and then to 2 and then to 1, and you're praying for it to go back up where it was, right? Which hope and prayer are not a good strategy in the market. Not without.
Well, and I don't know if you were listening, but the way I was explaining it was, I'm honestly not even hoping that those Q puts hit. I'll be happier if the Qs are up 2% tomorrow, but if they are down, then at least I can take some solace in the fact that I had some puts, and I'll take that extra few $100 and then put it back into the market.
There you go. There you go. Yeah, and I did hear you say it. I was in here for a couple minutes listening to you talk about Qs versus SPY.
I know. I could see you shaking your head backstage like, this idiot doesn't know what he's talking about.
Nah, come on now.
I know. Rob wasn't really doing that. I'm just messing with him.
Yeah, I've heard you talk on options before. You do a pretty good job. You understand what you're supposed to do. Does that mean that there aren't times you go with an aggressive trade? I do it all the time. I take a very small percentage of my account, and that's where the aggressive trade comes in, and I'm willing to take a chance that it may go against me. And if it does, it does, right? But I know that about 77% of our trades go off, become winners, and we're up. The most we've been up in any year has been this year. And 2022 has been our largest gain year ever in the setups that we do. So,
yeah, and that's one of those things where it's like do as I say, not as I do. Don't go out there and trade YOLO options, but then I'm going to go ahead and do that.
Right. There you go. But also, you've got risk profile there, right? You've got a different person. When someone shows up at an event that I'm teaching, a live two-day event, and the wife is with them, and the wife nudges them when I go to say hello and says, "Tell him." I'm like, "Oh, this is not going to be good." He did his first trade, made $1,000. He decided to put his entire portfolio into the next trade. He bought 35 contracts of the same option that expired that week, were way out of the money, and he lost every penny in his account in there. So there's a difference with how someone should trade and how many people do trade, right? Take a small portion into risk. I'm okay with that.
Yeah, 100%. All right, Rob. So let's go ahead. I see you've got Amazon pulled up. That is the title of the stream today. We're talking about Amazon options, just because I was talking about how my strategy for trading Amazon now will be a little bit different following the split. Before, when we were at, $2,500, $3,000 a share, I was mostly utilizing spreads just to keep it a little bit cheaper for me, call debit or put debit spreads. But now that we've done the split, the calls and puts, just the naked calls and puts, are back in play.
Yeah, they sure are. I mean, options, if I bring over the option chain on Amazon, options have really dramatically come down, right? And with them already being some of the largest traded options in the world on Amazon, and now we've got 120 at the price. I mean, you look at the bid-ask spreads. Here is a pure at the money option, 51 delta, 232 by 236, right? So there's 3 or 4 cents bid ask spread. It is minute, 87 by 91, 3 by 5 whole cents of bid ask. Oh, we've got 10 cents up here, right? There's very little bid ask spread in there. Tremendous. I traded these yesterday. We did some long calls yesterday. We did naked puts yesterday, which I still have, the 110s on the naked puts. So if someone wants to put the stock to me at 110, I'll be happy to take it. I think I got about a quarter for them yesterday. They were worth a dime today if I wanted to get out of it. But I don't see Amazon hitting 110 by the end of the week. So I think Amazon is a great setup. And of course, when we look at it on a daily chart, right, it looks like Amazon never traded at that price before. Right now, here's the key. The software that I use called Omega Charts, right? It's a proprietary software of ours. If I hit the letter U, all of a sudden, this thing is going to open back up to where it's did it split from, which was way up here at that 2,400 and split down. Hard to see because I've got new fibs drawn on there. But what it does is it goes back and takes all of the historical data, and pretends that it was a 20-for-1 split forever. And it incorporates that back in. Right, so we've got some fibs drawn on here. They're a little wide for where we're trading right now. I mean, this shows me that Amazon moves about $5.50 to $6 a day on average between high and low, based on historical prices, of course.
Wait, $5 to $6 a day? You said based off its new share price.
Off its new share price, correct? Because it was moving $200 a day,
right?
on its old share price. No, off of this share price, correct, off of this share price. So we've got a great setup on it right now, and I'm watching. I've got an order set in place right now. I'm waiting for, well, it's actually an alert. I'm waiting for a trigger to get me down close to that 119 level. We've had a low today of about 120.5. So I'm waiting for us to get down to about 119, the stock, where I've got my 118.56 Fibonacci level. I've got my 119.21 moving average and my 120.01 8 moving average. So I've got a lot of confluence happening in there. A nice pull down and a bounce. I'm going to add to my position. I'm in about 25% of the shares that I want to have in my portfolio. I bought them yesterday because you just don't understand what happens with these sometimes. Different market condition. We could have seen Amazon jump $15 or $20 yesterday after the split, which has not been a normal or abnormal, I should say, historically with stocks. When they announce these splits, you get occasionally these big companies get, especially with interest like an Amazon, you get huge moves take place in there. So I bought some shares yesterday. I did some pre-market, actually. I did 2 different buys during the market yesterday. And I'm just waiting for the pullback in there. We get that bounce. I'm also going to be looking at the longer term calls to buy. It's more of a swing, not a day trade on it. I'm going to look to buy some because I think Amazon's got a lot of potential over the next couple of weeks and months to move up where it can hit 140, 145 over that next period of time. Actually, we're looking at, let's see, 144.69 is the 0.618 fib level.
Wait, real quick, Rob, I want to stay on Amazon.
Sure.
But Shiny Man in the chat's asking a very good question. I don't know if you saw yesterday, but we got some new Nancy Pelosi trades. I think just call options on Amazon and Microsoft, but essentially like they were like, I want to say $80 strike price calls on Apple, just deep in the money calls. And Shiny's basically just asking like, what do you think of that style? He says, he or she says, I myself would not do what Pelosi's husband options trade style in this volatile market. Does not make sense to me.
Yeah, I agree. I mean, he's buying them for long term. I didn't see it yesterday. So it was on Apple. There were 80s. Do you know how far out he went?
I believe like a year out, $80 calls.
Okay.
But to me, if you're bullish and you think it's going up, then why not buy strikes that are near the money or at the money or right out of the money, you know?
So, all right. If we look at an $80 strike, all right, there's a rule to how we buy these or how we should look to buy these, okay? So here I'm 375 days out into June. Again, I'm not sure what strike he did or what month he did, but might have been this one because we've got 1,000 contracts open right now, 32 traded today, but 1,000 open before today. And we've got an 80 strike with a 94 delta, okay? Problem is that delta range is too high. And you've got to understand the risk curve when you look at this. When you look at a curve on an option, you look at that bell curve. I couldn't get the word bell out. You look at a bell curve. If you are taking an option on with a 90 delta, that you're very close. If this is the top of the bell, you're right here at the bell. You've given up all of the benefit of that small movement that's left. There's not there. You're a 1-to-1 ratio.
Right. There's like not a lot of alpha in there.
Yeah, it's not. I mean, you're done. Okay. When I get myself down to that 65 to 85 delta, for me, closer to 65 delta, that puts me in the sweet spot. My peak is here. My base is here. Let's say, let's see. How do we do it? My base is here. Sorry. My base is here. And then my base is here. Right above that is the 65 delta where I'm at. You're in that sweet spot. So gamma gives us the greatest increase at that point. Buying these widely deep in the money options, to me, is a huge mistake, unless he tried to offset it somehow by turning it into some kind of ratio spread or something. I don't know. But I would not be buying anything with a higher delta than 85. And if I have a 65 delta that has over 100 open interest, I'm buying for 28 bucks. Why in the world would I go up here and buy for $70? Every dollar the stock moves on the 80, I'm going to make 94 cents. Every dollar the stock moves on the 135, I'm going to make 68 cents. Call it 70. Call it 70 versus 90, just to make them round numbers. Well, that 20 or 25 cent difference that I make, if I buy one contract, look at the cost. I could buy 10 contracts of the 135s and still have a much better opportunity. 2 contracts have a much better financial opportunity than putting all that money at risk, way in the money. No, not a strategy I think any options trader, experienced or not, should be trading.
Yeah, and I mean, I'm with you there. Like I talked about what I do, and it's literally the exact opposite. I'm buying out of the money puts that expire tomorrow, not deep in the money calls, a year out. So I don't understand it. I don't know. I'm not one of these persons that goes out and looks really that much at what Pelosi's doing or what her husband's doing in terms of trade. I think her husband is some sort of like investor trader guy, right?
Yeah, he made huge money during the pandemic. More than anybody else in Congress, Senate, was him. It was crazy what he went through, right? I mean, the money he made and how much of that, I don't know, but could have been. And that's where the fear is of, you've got inside information from your wife, this may not be the right thing to do.
Yeah, he was like buying Zoom calls like before they had even ever said anything about COVID. It's like,
and Procter & Gamble and with Lysol,
Johnson, yeah, whatever.
It's just crazy.
But I mean, not to get political. I mean, it's on both sides there, and there's on. But if you look at the Congress trading, I think actually in like if you look at the top like 50 people that the top 50 traders that were making money last year, that a lot of them were on the other side too. So there have been, I think, politicians on both sides kind of proposing some sort of ban on stock trading like that. But
sure,
who knows? I'm not very bullish that's ever going to happen.
I agree. So here, if he were turning this into a diagonal spread where he bought the 80 way out in time and selling the weeklies against it, and right now I could sell the 149 strike, and it shows about $1.50 as we're going to pick up for it. But he basically would lay out about $70, $69.50 out of pocket. If someone decides to take it away from him at 149, he could then take it away from somebody else at 80 and put it to that person or give it to that person at 149. So you got $79. Is that right? $69. Right? You got $69 difference between the two strike prices. Am I making sense, Aaron, what I'm saying?
I don't know. You're going to have to back up for a second.
Okay. Yeah, don't let me go off on a tangent if you're not getting it. That's for sure. So if he bought the 80 way out in time,
okay,
right, that gives him the right to buy the stock at $80 a share.
Correct.
He then in turn would sell the 149s against it, which is the strike price right now that is closest to 40. Right, and that's what I'm looking for. Ideally, I want below 40. It's right now at a 42 delta. But if he sells that 149 delta, you're talking about someone can make him sell Apple to them at 149, but he could take it away from somebody else at 80. So that's a $69 difference is what he would make on the stock on that sale, and he spent $69.60 to get into that trade. So if he's using it this way, he's only really assuming the stock doesn't go drastically against him. If it does get taken away this week, he's down 60 cents. If he does it again next week, he's already ahead of the game by $1-ish come next week.
Got it. That makes sense.
I'm not saying that's what he's doing, but I do a lot of diagonals. This is not my favorite market for them right now. And if it is, I'm doing more of the put options, not the calls, the diagonal puts. But just as an FYI, what he might have been doing there. So I hope that helps.
It does help. That's helpful. And I wanted to ask that question because I think it's a good question. It's good to ask someone like yourself that question that knows what they're doing in terms of options trading. And I am in complete agreement with you. It's not how I would be trading those options. I think if I had that much money, how much money they have, I don't even know if I'd be doing options at all. Maybe, I don't know.
I have a friend of mine, Trevor, that I used to teach with a long time ago, and a very large account, doesn't trade options anymore. It's pure stock at this point. So for me, the leverage is there, the sexiness is there, the excitement is there. Stock, okay. It's too much.
Well, I know, and that's why I like options too, is because like my Robinhood account, it's a smaller account. Like I can truly, I have more potential to grow this account from $3,000 to 20 through options than I would buying stocks. I mean, it would take me however, so, but what I'm saying is if I had, millions and millions of dollars, maybe I just put it in something that's yielding me, 10% a year and I know I'll be fine.
Right. AMD is a great example. I could buy the shares at $100 a share, just to make it, again, round numbers, right? I could buy it for $100 a share. If I buy 100 shares, that's $10,000. Okay. I controlled 100 shares of AMD today with the $100 call at $4.70. So I spent $470 to control $10,000 worth of stock. Would I have made more money if I bought the stock? Yeah, I would have. The stock went from 103 to 106. I would have made $3. I wound up making 470 to 640. I don't know, whatever that comes out to be, $1.60, 70 on it. I don't need to make all the money, but I've got so much less at risk in that trade with options. I can really get excited about options. I can't, unless I'm doing something with the stock, like a covered position. I can't get excited about it.
No, I hear you exactly, and that's really the true advantage of options. You have the ability to control 100 shares of something that you don't have the actual money for. I mean, half the time when I buy a contract on a stock, not even half the time, every single time I buy like a call option on a stock, all I'm trying to do is sell that contract for more than I bought it for. I don't have enough money to exercise the option and buy 100 shares of Tesla, but I have enough money to buy a call and then sell it for more if it goes up.
Correct. Absolutely. And that's me. When I started this game, 20 plus years ago, 1997, I had a very small account. I knew nothing about the market. Trading stocks was something that was so foreign to me. Here, I'll give you a great example. Aaron, what does it cost you for an options trade in Robinhood?
What does it cost me to put one on?
Commission for Robinhood.
$0. $0.
My very first trade ever with options with 10 contracts, I made the decision on the stock. I picked the option. I called the broker. They charged me $400 to enter the trade for commission.
And this was back when?
97.
So $400 back then was like, you could buy a car with that now.
Yeah, pretty much. Right? Today's day and age. And that was only to get in the trade. I still had to get back out of the trade.
And you had to call someone. To me, that's worse than the money you had to pay.
Especially if you're wrong when you got to get out. And they're like, oh, you see, you did that trade, even though I didn't think you should.
Well, and that's the other thing, too, is you got to think, for guys like me, for retail traders, every time you buy an option contract, someone's selling that to you. You got to think, why are they selling this to me? Why do they want to sell this to you? They're selling it to you because they don't think it's going to hit. They don't think it's going to be in the money, so they're willing to sell it to you.
Well, and you're right, if there's a one-to-one transaction, but keep in mind, you've got a market maker in there. And they have to take the other side of that trade, even if nobody else does. And that's where bid-ask spread comes in. They make their money on the difference in there. but they're not going to sell a position if they think there's a high probability of it going against them. That's where things like delta come in. It's a probability indicator, right? It gives us a calculator. You know, if you have a 60 delta, there's a 60% chance that that stock will have intrinsic value come expiration date. Well, that's okay. It's kind of 50-50. So a 75 delta, wow, I've got a lot better chance. And it works the same way as a seller. But the market maker, I went to my very first year as a trader. I got invited down to the New York Stock Exchange to go for what they called at that time, maybe it was American Stock Exchange, American, trader for a day. And you went down and you went onto the pit after the market was closed, and they did a mock trading session where they held up a piece of paper that said Microsoft to buy Apple. Apple stock dies $20. And it was just stuff like that, just funny stuff. And we were down there when the market was open at first, and the guy's talking to us, and his girl says to him, hey, someone wants to do this with the option. He looks up at the board and comes back and goes, well, do this instead, offer this. And he starts talking to us again. I said, whoa, stop. What did you just do? He said, what this guy wants to do would put me in a bad position as far as risk goes if I didn't cover it. So I went ahead and hedged that trade by buying stock to offset it in case he was right. It's all about making the money, right? I have a very good friend of mine that worked for John Nigerian for 25 years. I used to teach with him, actually.
Great guys. I love both of them. They've been on the show before.
Yeah, I've seen them. They're great guys. And he shows up. When I first met him, he's in my 2-day live on location event. And he tells me what he does. I'm like, why are you here if you're an options market maker? He goes, Rob, I know how to hedge and offset risk, but I don't know the strategies that you guys know. We don't do those types of things there. It's all about protecting the firm's money. It's not about, ooh, can I buy this and it runs up and I made $100 or $1,000. It's making small increments over and over and over again.
Love it. Shelly, hate to see you go, but bye. Have a great rest of your day. Hopefully,
take care, Shelly.
Take care, Shelly. Diego is saying he's got a contract for SPY puts 380 June 24th. That's coming up here in about 2 weeks. Wow, 2 weeks from Friday. Man, time fun. Rob, is it gonna start slowing down at some point for me, or is it gonna keep going faster?
As you get older, it goes quicker. Sorry to say, hate to burst it. Hate to burst it. So look, right now, you know,
I was celebrating New Year's like last week, and now it's
right.
June
It's
20.
what it feels like. You know, I missed the show 2 weeks ago because my daughter got her master's. She graduated.
Oh yeah, congratulations!
Yeah,
again.
thanks. It was crazy. They changed times on us.
I know. You said she got her master's.
Her master's in teaching. Yeah.
Oh wow.
So she's got a great job. She's doing well with it. Thank you. But Diego, check this out. Look what's happened. We broke above the moving averages right here, right? We were in a nice bearish pattern and a true bearish bias. The 8, which is the pink, was down below. The green was above 21, and the 55 was on top. And they were spreading. They're widening out, right? Then we came back up above. Moving averages got a little bit of cross here, but we came above the 21, and what have we done? This is what we call the dreaded box of neutrality. Right? We're just in this sideways
barcoding
pattern. Yeah. And barcode, I like that. Until you break out of there, Diego, I don't have anything. Where would the more likely location be to go would be down, right? We're in a neutral bias right now. It would be easiest to get into a bearish bias, meaning the 8 moving average, the pink going back below the green. That would be the easiest. If it did and it retests this fib line at 406, you got 400 as the next target. So you got some nice opportunity there. As far as where it goes, I mean, you're in a short-term position, so you've got to keep watch of that. But the rectangle that I just drew, Diego, if you see that we break out of that 418 top, I'd be very concerned on holding any kind of put. Right now, this is very much a wait and watch as far as hold goes. Day trade all day long. Trade this. What was the problem today with buying off of that bounce? It was an ideal spot to buy on SPY, right? And we trade this all the time. This is a regular position. Some of our students, we hear them all the time. I made 6% today, 4% today, 8% today on SPY and Qs. Those are the two major ETFs that we trade.
Yeah, and I think right before you came on, someone was asking about the difference between trading the spies and Qs. I tend to lean toward the Qs just because there's more movement there. But I think there's a lot of times. When would you prefer trading SPY options compared to the Qs?
I primarily trade SPY. So Qs, the SPY moves $9.30 a day on average. The Qs move $9.70 a day. So
the Qs is lower share price.
It's definitely lower share price, but I'm not trading the shares. I'm trading the options. But
no, you're saying the option contracts move $9? No,
sorry. The Wilders average true range tells us the last 13 days is the number I use. It's this setting right here, $9.50. That's how much in the last 13 days the Qs moves on average from high to low inside the series of a day.
I like to trade the Q options because I think they move more than the SPY. You telling me I'm wrong?
No, not telling you I'm wrong. I like the SPY better.
Okay.
I like the SPY better. The SPY has the SPY doesn't have the Amazon/Apple relationship that one stock can tank it.
Right?
And I was probably the first person in the country back in 1999 teaching how to trade some of these types of positions. I had the first ever that I knew of class called Trading the Qs. Right, the spiders came later. I did this.
No, I was already teaching people how to do that back then.
Yeah, there you go. It was a great class. It was great training. You know, people had no idea what we were doing. I had newsletters that went out on it and everything. It was before the world of let's teach this stuff for real. It was just things I did on the side and didn't charge anything. Just we had 5,000 people that were getting this all for free. And I love trading the Qs. I just find that the buying programs in the SPY give me a more consistent movement than Apple has bad news and it's 14% of the Qs and the Qs
right
across it.
Right.
That's the only disadvantage to me from it. But it's the other side. Apple has great news, and man, I'm going to crush it on that trade now on the Qs.
So wait, let's go back to you said $9 a day. So if the SPY moves around $9 a day and it's $411, and the Qs also move around $900 or not $900,
sure.
$9 a day, but it's $300. So it's about the Qs move on average about 25% more than the SPY. Does that sound right?
It does, which doesn't matter to me in my options price. Think about it. If both of them make it easy and both of them are $10 is the intraday movement high to low. Okay. Just to give us easy math. I don't want to do math here. Okay. Easy math. And the SPY moves $10 and the option has a delta of 65. Well, that option is going to move $6.50. If the Q option moves $10 and has a delta of 65, it's going to move 65 cents. The percentage of move doesn't per se matter in the options pricing. Right? From a percentage of movement, yes, it's a bigger move. But my option, if they're the same Wilders average true range, if the stocks both move equally and I have equal delta options, I'm going to get similar moves on those positions.
That makes sense. And are you ever trading the midweek expirations on the S&P 500 on the SPYs or no?
Only. And I trade them on SPY and Q.
Wait, only? You only trade the Wednesday?
I trade the Monday, Wednesday, Friday. I trade all three of the days. Any day that's available, I'll trade it.
There you have it.
Right. And so right now, here we are Tuesday, I'll trade Wednesday's options. Come tomorrow, I'll trade Wednesday's options. Friday afternoon at 3:50 p.m. Eastern time, I'll trade Friday's option.
That makes sense. No, I love the midweek. That's like why today I love being able to buy options that expire tomorrow.
Yes. Very much so.
When did they implement those?
Weekly options have been around now for about 10 years. They started off with 5 or 6 companies. Actually, it started off with 5 or 6 market makers. Each were able to pick 5 or 6 companies, I think it was. So some of the multiple market makers all picked Apple, right? So that became one of theirs that they offered. But you had about 12 or 14 in stocks initially, from what I remember. It's a long ways back. And then from there, it's grown and grown to where we've got about 500 plus stocks now that have weekly options on them.
Weekly, right?
Yeah, and I don't
but only what has midweek, the Wednesdays, just
the
Qs and
midweeks now.
SPY.
We've been probably about 2 years or so, maybe 3. I don't think it's been much more than that. If it has, it's just me missing out.
Soon we're gonna get daily. We're gonna be able to get Tuesdays and Thursdays on SPY too.
Every once in a while, I see a Monday, Tuesday, Thursday, Friday option on SPY.
Really?
Every once in a while. I've never looked into the why, but it's there. I don't care. I'm going to trade it. I love it. Then on Thursday, it gives me another day to pay the least I possibly can for that option. Right?
Interesting.
And for me, Aaron, I have SPY and Qs is basically that, and Berkshire B shares are my retirement portfolio. So I owned a large portion of Qs, a large portion of the SPY, a lot less on Berkshire. And ironically, they're the one that's done the best for me of all of them. But I write covered calls on them all the time, weekly covered calls on them all the time.
There you have it. Rob, it's always a pleasure to get you on. We love having guys like you that have years of experience doing this, have a wide kind of or a deep well of knowledge when it comes to options, because it's such a tricky game that a lot of people have just gotten into over the last couple years, that I would implore anyone who's newer to options to be finding guys like Rob Roy, finding guys like David Green, who we had on before, that actually know what they're talking about, not just some kid on TikTok telling you buy this, buy that.
Aaron, if you got that tradinglikeaboss.com, guys, I'm going to tell you right now, I have seen amazing changes in traders this year. If you go to our tradinglikeaboss.com, everything on this page is free. All these resources are free, right? This key to be free training right here, it's about an hour and a half long. It will show you what it will take you for this year to get you free to be trading the way that you want to. It'll teach you exactly what it is that needs to be done inside of there. So go and check it out, guys, or any of the other resources that are on this page.
Yep, and I threw that link in the chat. It's on the screen as well. Tradinglikeaboss.com. Congrats on that domain too, Rob. That's a good one.
Yeah, thanks. I was happy to pick that one up. That's for sure. Cool.
All right, Rob. Well, get you back on next week.
Next week?
Or we're doing? Yeah, I forgot we're doing every other week. So I guess I'll see you in 2 weeks.
Listen, I'll be back next week if you want me. You let me know.
All right, I'll hit you up. I don't know if you heard, but Spencer's not with us anymore, so I'm looking for more guests to help me kill time.
I did not, so you let me know, my friend.
Yeah, sounds good.
Excellent. All right,
have a good one, and congrats again on your daughter's graduation.
Thank you, I appreciate it.
No problem. All right, y'all. Rob Roy, tradinglikeaboss.com. I'll throw that link in the chat one more time. Go check it out, because Rob is a good dude. He knows what he's talking about. All right, guys, quick rundown for the rest of the show. I'm going to bring on Dave Mazza here in a few minutes, head of product from Direxion. We're going to be talking some ETFs, leverage ETFs, always fun stuff. And then after that, we'll have a few minutes to just go through some tickers from the chat. If you guys have any trades, any questions about different things going on. I did also want to touch on we're going to do another little segment on gas prices and the oil stocks, see what we think about those, and then a few thoughts on crypto right now as well. Lighten up, asking what happened to Spence. Nothing happened to Spence. He just is no longer with us. Little issue with one of the interns that came in. No, I'm just kidding. He's just moving back home to New Jersey with his fiance to start a family. He wanted to move home. I don't know if he's actually starting a family, but he wanted to move home. I'm sad about it, but it is what it is. It's what's best for him. But all right, guys, let's go ahead and bring Dave on. We'll give him one of our special intros and talk some ETFs. Mr. Mazza, how are you doing today?
Doing well. How are you?
Good. This is the first show we're doing with you with Spencer gone, so I hope everything stays on track.
We'll do our best.
Anything top of mind since the last time we had you on? Any changes and anything you're seeing? Any interesting developments in ETF world?
Well, I think what's interesting, I'll note it. We actually last Wednesday we launched a new ETF on the NYSE called the Direxion Breakfast Commodities Strategy ETF. The ticker is BRKY or Brekkie. And this fund provides exposure to 6 commodities that are staples in American breakfasts. It's an unleveraged product. And it's really an idea as everyone feels the pinch, right? We go to the grocery store, we go to a restaurant, prices are higher. Whether you're a high income earner or a low income earner, that eats away at your wealth. So we thought there was an opportunity to introduce this product to the marketplace to allow traders and investors to take advantage of these rising prices and diversify their stock bond portfolios.
And sorry, Dave, what's the ticker on that one more time?
It's Brecky, BRKY.
Oh, I like that.
Yeah.
It's got 2 good things there. You've got, I love me a good topical ticker. Like I think you guys have Nail, right, for the home builders?
Correct.
That's one of my favorites. So you've got Brecky for breakfast, but then also it's kind of it's almost like it's like Burke B instead of Burke B. You got Burke Y.
Burke Y.
Yeah, the chart's not really gonna populate that well just because it's so new. But yeah, it's so interesting. I actually got to tell you something, Dave, and I know we'll talk more about how traders and investors are supposed to utilize some of these leveraged ETFs. But I went ahead and bought a few shares. How about let's do this? I bought a Direxion ETF yesterday. I want you to try to guess which one it was.
Let's see. XRT. No, sorry. Yeah.
No. It's a Direxion one.
Okay. Let's say Soxel. Let's say you're stepping in.
Soxel. No, I am bullish the semiconductor space right now, though, so maybe I should check this out. And also, I should back up here for anyone who's like new to investing, new to trading. Essentially, ETFs. Well, actually, Dave, I'll let you explain what an ETF is.
Yeah, so ETFs are really a diversified portfolio, and historically they were only index-based, but now they're actually index and active that trades on an exchange. So you can buy it and sell it on an exchange just like a stock, but you get a diversified portfolio, whether it's stocks in S&P 500, small cap, Russell 2000, or even narrower areas of the market. At Direxion, we specialized in a subset of ETFs called leverage and inverse ETFs. And what these are is they're intended for tactical trading. So they allow someone to access amplified exposure in an ETF. So meaning by amplified, I mean 2 times the exposure, 3 times the exposure on a bull and bear basis. But it is important to remember, especially for folks who are new to trading or new to trading ETFs, these are daily trading tools. So they're not intended to be held over the long term, because if you get your positioning wrong, you're gonna struggle. If you get it right, certainly everyone points to that and looks at these long-term charts of various areas. But really, you can own them longer than a day, but you have to have the ability to make that buy, sell, or hold decision on a daily basis. And if you don't, maybe not for you. And as Spencer used to point out, we have resources on our website, including a quiz that folks can go through to understand, hey, this is an area I understand the trading or what have you. So really advocate folks to check that out if they're interested.
Here you go, Dave. Already bringing up things Spencer does better than me. No, I'm just kidding. And that's what I love about what you guys are doing, because essentially ETFs, right? So if say you want to invest in oil and gas companies, but you don't want to go out and research, whether you should buy Chevron or Exxon or ConocoPhillips, you can just buy an ETF that tracks the oil and gas industry. So, ETFs were kind of made for that type of passive investing. And what you guys have done is taking this trading vehicle and then completely kind of flipped it on its head and said, okay, now we're going to take this vehicle that was made for this type of passive investing and make it for active traders, which to me is very cool.
Yeah, it's a great way to put it. So you get that diversified exposure where you're not just kind of picking an individual, to your point, Chevron or Exxon, and trying to make that decision and get kind of that single stock risk. You can get a diversified basket of those with a traditional ETF. But also, if you want to take that kind of amplified exposure, you can look at a fund like Gush, which provides 2 times the exposure of the underlying index for an ETF that's well known called XOP. So with that being the case, again, if you want to trade and play this sort of reflation idea, oil prices, Goldman's out with a massive forecast for yesterday where oil may end up. These stocks are going to benefit in a higher inflationary environment. particularly one driven by higher commodity prices, especially oil. So, this is a trading tool for this narrow group of companies that are held in the oil and gas space.
Right. And like you said, I mean, especially when you're trading leveraged ETFs, this is something that you want to be able to keep an eye on. But, and I was saying this earlier with the way I trade options, I'm going to do it again. Do as I say, not as I do. I'll go ahead and tell you what I bought yesterday, and it's the opposite of Gush. It was Drip. And we're down. We're down a little bit today, but I bought it knowing full well that this could go down quickly because it's a 2 times leverage ETF, and Drip, by the way, is the inverse to Gush, so it's essentially the bear oil and gas. And I'm just looking at the chart here. We'll go out to like a 6-month chart. We're getting, to me, we were still getting a little overextended there. But like you said, you have all these banks and stuff saying how much oil and gas is still going to go higher. So maybe it was stupid, whatever. I bought 5 shares. It was like $75. If it goes up a bunch, great. If it doesn't, that's $75.
Yeah, there's some corollaries to looking at options trading. Very, very different vehicles. Very, very different kind of need for understanding of how they behave. But at the end of the day, both can provide you with leverage in a inverse or a bull or bear ETF. That leverage is embedded in the product, so on a daily basis you're going to get that 2 times or 3 times exposure. Of course, options can embed different levels of leverage and use different techniques, but we do see, particularly in this market, folks looking at both sides of the trade. So for years, as we were just in a bull market, we weren't seeing a lot of activity with our inverse products or the bear funds. That's, of course, changed in 2022, and we're seeing a lot of two-way activity, especially in areas like energy, to some extent financials, and, of course, in the treasury space, as volatility there has skyrocketed as well.
And then, Dave, do you have any insights into just as far as like which ETFs retail investors are buying right now? Have those buying habits changed? You just mentioned that obviously the bear ETFs have been getting more love recently, but I'm thinking more like within the last month or so. Have you seen any changes, or do you guys not get? Would those insights mostly go to the brokerages where people are actually buying these products?
Well, we're fortunate where we get some of that information through a few sources, including the brokerages, of course, all anonymized and things of that nature. But an area that we've been getting some inquiries in is what's going on with small caps. So we have 2 funds there. The bull fund is TNA, the bear fund is TZA, and these provide 3 times bull and bear exposure to the Russell 2000. Small caps were an area, have been a kind of a tough trade. A few years ago, everyone was calling for small caps to rally. Then COVID hits, they get creamed, and then again coming out of that, thought that they're going to do well. And really, in this environment, they're riskier than large caps. So we're seeing really, like I'd say, a kind of a dogfight between bulls and bears in the small cap space. Time will tell who prevails, but it's an area that's really picked up steam lately.
Yeah, and I remember last year going into the summer, there was a lot of talk on like FinTwit, financial Twitter and stuff of small cap summer, and then the Russell went down another 15, 20% or whatever. And this year, I don't think I heard anyone call for a small cap summer.
Yeah, and I think a lot of folks are now pointing to valuations. Yeah, I never trade based off of valuations alone. They've been because you can be attractively priced on a PE basis or choose your favorite more sophisticated valuation metric for years. But until you have a catalyst, it's hard to see that. Look at the energy space, right? Folks were saying, energy's over, the trend in ESG, carbon intensive assets, stocks get cheaper, they're trading below their book value. And then guess what? There's a massive catalyst that we have supply and demand shocks, and economic growth is improving, and oil rips, and the shares do well accordingly. So small caps certainly attractive from a valuation standpoint. I think everybody would acknowledge that, but it's difficult to see kind of that earnings catalyst to get them out of their slump.
Yeah, and this is I just have Gush pulled up right here, and so this is where, like, say, at the beginning of, okay, so here is COVID, or no, all the way back here is COVID, or this big where it came down. But then say you wanted to get long oil, and you got long oil and gas like down here, right? You're at 30 $8 here. Now Gush is at 246. But what Dave's saying is that typically people trading these vehicles aren't buying and holding Gush for a year and a half or 2 years. They're, they're looking for a quick move on oil and gas, and they want to be able to play it to the upside or downside.
Yeah, no, exactly. I mean, even look at that chart. You can, you could pick your points going, from the 30s to close to 250. But there's been some pretty difficult pullbacks during that environment, which is why we don't advocate these to be used as buy and hold vehicles. But for someone who's interested in the space and say, hey, there's an opportunity here. I think these companies either, there's going to be more upside, and there certainly has been of late. And you're taking a bit of a contrarian view of where consensus is right now, which certainly can always be a good thing. This can be used as a tool for you to amplify that short-term exposure.
Yeah, no, and I love the leverage ETFs. They're so fun, but it's just one of those things where I'll say it again, like it's just not for like Spencer would say, do the quiz on Direxion's website, see if it's something that it's for you or not. All right, so I do kind of want to talk about SOX right here, because have you been seeing? Because for a while, I assume for a while these were some of the hottest, most bought ETFs from Direxion.
Yeah, by a wide mile, and Soxel kind of came out of nowhere and became our largest ETF. For good reason, because semis it was hard to not be bullish on semis as kind of the tip of the economic spear. That's how I think about semis as a whole. As the economy, regardless of the supply chain issues of semi, as the economy is being forecasted to slow, and the U.S. economy, global economy, on a quarter-over-quarter basis, semis have really been hurt, coupled with many of them trading at particularly rich valuations, even if some of these names like NVIDIA are just doing unbelievable things in the space. And plus there's some issues with crypto and gaming maybe being impacted too. But what we're now seeing is that the kind of a little bit of the love of Soxel has come off, but volumes have not. Right? If you look at the volume on your chart there, even if it's come well off its highs, we are still seeing, other than last week, which potentially may have been an aberration, traders continue to buy the dips there. Last week, I think I may have noted it was the first time we saw outflows out of that product in some time, but right back to it this week. People are moving back into the semi space. So it was interesting. The outflows came on that up week, and now that we're seeing potentially another pullback again, traders are coming back in and dipping their toes back into a bullish view on semis.
Yeah, and you can just see right here, I mean, from COVID on, right, we were just on an insane bull run for semiconductors, and you name it, right, whether you were looking at NVIDIA, AMD, whatever, and now we've kind of come back to earth and we're back down to pre-COVID levels. But like you said, kind of the tip of the spear for the economy, right? Semiconductors are in quite literally everything produced essentially now. It's people think about it like, oh, computer chips, like in computer, like no, like your refrigerator at home has semiconductors in it now, whatever it is. So that was, I'm sure, you guys were happy that you guys had this, that ETF live and active while this run was happening.
Yeah, no, that's absolutely right. And being originally from Boston, the movie Departed is one of my favorites. And there's a great line where they call it microprocessors. That was even 10 years ago, that was a big deal that they would be involved in some sort of, people were stealing them, right? Now they're ubiquitous. It's everywhere, right? Whether you're picking up your phone, your computer, your actual computer, or literally any piece of hardware in your house, there's probably going to be varying levels of sophisticated semiconductors in there. And as the chips get smaller and smaller, they can be put into more and more devices. So that trend isn't going away at all. The challenge is, are investors going to be willing to continue to pay up for that high earnings and revenue growth in a slowing economy, which is why I think some of these names have been hurt so hard.
Yep, and just like bartenders, the world needs plenty of semiconductors.
That's right.
All right. Well, Dave, is there anything else on the top of your mind you want to talk about today?
No, I think we hit all the important topics. Like I said, check out our website for more information. We're seeing some real, two-way markets, which is one of the reasons why we have bull and bear leverage and inverse ETFs that traders can take advantage of, expressing their short-term and tactical views.
Yeah, and I was talking about this earlier before you hopped on the show, just how kind of crazy and volatile these markets have been. And that's why, some of these vehicles, like being able to trade them is so important, because you can literally go bullish 3 times today, flip, go bearish tomorrow. It doesn't matter. You want that freedom to be able to be nimble in this market.
Yeah, exactly. And these are the markets for that. I think a lot of people new folks came into trading when it was really just kind of a one-way street.
Right, just going straight up.
Going straight up. But for traders, actually, you want volatility because you can take advantage of moves, particularly if you're interested, in short-term activity. I wouldn't put all of my wealth or savings in a trading strategy, but in this market, it really can these tools can help benefit you, or even adding an inverse exposure going into earnings season can be pretty beneficial too.
Definitely. Dave, well, it's always a pleasure to get you on. Dave Mazza, the head of product at Direxion. I threw the link in the chat to the website. Check it out. Wherever you trade stocks, you can find the Direxion ETFs on there. Dave, have a great rest of your Tuesday.
Thank you. We'll talk soon.
Talk soon. All righty, y'all. That was fun. Always fun to talk some leverage. What? You want me to leave the stream just alone? I'm getting talked to by my producer over here. I was trying to find if we had like a video we could. It's ridiculous. Okay. This is what happens when Spencer leaves. There's no, I don't know. But before we do this, all right, okay, we got Spencer back. Can you act like Spencer too? Can you find something to yell at me for?
Hey, B, did you send that email?
No, I did not.
Did you send the links out for the show?
No.
Did you follow up with everybody that we got on for tomorrow?
Oh, wait, Spencer's mic was muted.
Classic.
I did say I saw something in the crypto world that I wanted to talk about, and I want to preface this. I want to put this out there first, that I don't even honestly, I don't know / I don't even think, I don't assume that this is legit. But I saw it on Twitter. It was getting some traction on Twitter, and I thought it was interesting. So that's why I'm bringing it up, not because I think it's legit, not because I think this is verified factual information. I just think it is interesting. I saw it on Twitter, like I said, getting some traction among some of the crypto community on Twitter. Essentially, it was a tweet from, and let me find the account, A Dying Nobody is the account. Name. Are you gonna play a sound or something?
No, I'm just getting myself familiar.
Getting yourself familiar with the stream deck.
Exactly.
So here I'll share. Let me share my screen here.
Just feel like we're underutilized in the sounds.
We are underutilizing the sounds for sure. So this is why I think one of my core jobs as a quote unquote journalist is to be able to factually check information and verify. So this is not that. This account got some random crypto address, it looks like, up here. A Dying Nobody, no profile picture, joined June 2022, but has quickly gained 26,000 followers. They're posting some kind of
no profile picture. That's red flag off the bat.
Lots of just tweets about crypto in general. But they tweeted this link today, and this is the one that I said was getting some traction. 14,000 likes, 10,000 retweets. We're gonna go to this link, which is a twit longer.
Wait. I saw somebody post it in our everybody chat to not click on that link.
No.
It's pretty spammy apparently, or something like that.
No, it's not. I clicked on it. I'm about to look at it.
Okay.
It might be a
Cool.
different link, the one that you're
All right,
talking
well,
about.
we will click on it for you.
We'll click on it for you so you don't have to. So it just goes to this site, Twit Longer, which is a site. I've seen people post these links on Twitter before. It's literally just for when people want to post a tweet that's too long to post on Twitter. They'll
Makes
post
sense,
it on
yeah.
this site. So we're just going to read some of this thread, and it gets into some kind of serious allegations and shit by the bottom, so I don't want to read the whole thing just because it's a little dark for me, and I like to, my last name's Bree. I like to keep things breezy. Nice,
Oh, wow, I
nice,
love that.
Easy, breezy. Dear Crypto, I want to come clean, and I will likely tear a rift in the entire community while I'm at it and on my way out. Over the course of these next few weeks, I will be releasing 21 gigabytes of Telegram group chats and messages, of which I was not a part of. All right, before we continue, if you're not familiar with Telegram, it's like Signal. Essentially, it's a end-to-end encrypted messaging service. So for people that want to message someone not on, iMessage or Snapchat or something, they can use Telegram. You can use Signal. And it's become a favorite for crypto people because they've seen as more secure as, posting on Discord or Twitter or whatever. All right. Why? This is all thanks to an exploit in October of 2019 that allowed one to access the group page with recent messages if proper permissions were not set up. So I think what he's saying is some bug allowed you to join a group and then see old messages before you were in it. I'm not quite sure. We'll read it again. This is all thanks to an exploit of October 29 that allowed one to access the group page with recent messages if proper permissions were not set up. Or maybe he's just saying he was able to get into some private chats because they didn't set up the permission. I don't know. At the time of writing this, the team at Telegram have been contacted about this. Should be the team at Telegram has been contacted. Singular team. I've only ever seen 2 people mention this exploit in passing, one in person and one on Twitter, so I know I was not the only one. Those who know me, I don't know how the frick we're supposed to know who you are. Your name is literally a dying nobody. You got no profile picture, whatever. But he or she goes on to say, those who know me will know who I am very soon. For the rest of the... Okay, I didn't read that far. That makes sense.
No, let's just keep reading.
The populace, it doesn't matter. Due to the overwhelming amount of messages, I formally invite reputable press within the community to reach out in order to obtain sample archives from groups I've already curated. I will vet you because there's a conflict of interest as many are involved personally, whether being friends of those individuals in this archive or related financially in one way or another. Maybe I should actually reach out to this dude. Let's give him a tweet right here. We'll give him a live tweet on the show. We'll give this man a live tweet. I don't know how else I'm supposed to reach him, right? He's got a dying nobody. He doesn't have DMs on here. Doesn't seem to have any contacts listed. So here's what we're gonna do. We're gonna tweet. Well, here's what we're gonna do first. We're gonna give him a follow. So that way he sees we're following. Dying nobody. Hi. What should I call him?
Hi? I don't know
Not
if you want to
hi.
say hi. Don't say hi.
We
yeah.
would like to cover your...
No, don't make it more of a kind of a casual approach, right?
Casual?
Yeah. We would like to. We're trying to talk to him as you know.
Trying to be nice.
Yeah, absolutely.
Okay.
But
So
I
what
think
do you
it's
should say?
kind of formal. I'd say be kind of casual with this
Just
guy.
say, let's chat.
Let's give him a sandwich, right?
Let's
so
give him a sandwich?
yeah, talk about the thread. Say
Okay, read
the thread.
one of our writers read your thread and would like more info. How's that?
Yeah, that's a good start.
All right.
And then put in the ask.
Put in the ask.
Yeah. So now after.
Should I give him my Telegram? Maybe he'll...
Yeah,
no,
yeah,
it doesn't sound
some-
like he likes Telegram.
Seems like he's beefing with Telegram.
Yeah.
Okay. Let's see if he
Should I
wants
say LMK?
want to talk more, or would love to
Would
talk
love
more.
to chat more.
Yeah, there you go.
Would
Boom.
love to chat more. Best Aaron. No, we don't need that. Exclamation point? Too much?
No, that's just enough.
Just enough. All right. Cool. Tweet sent. All right. Let's get back to the thread. And again, this could all just be some clown that doesn't know what he's talking about or doesn't have anything to do. But I think it's interesting. I'm going to keep my eye on it because if it ends up being true that he's releasing some of this stuff, it could have some implications. I have no further relationships with people mentioned after this and will never be in contact with them in the future as of this moment. 3 years ago, a vulnerability at Telegram was discovered by a colleague of mine. He did not take it to its final outcome. By exploiting this, one could recreate an invite to view the overview page and recent messages of any Telegram group an individual user without actually joining said group. All right. So there you go. All we had to do is keep reading it, and we got the...
That's all we didn't do so far. Is just keep reading.
Between October 2019 and May 2022, I was collecting all messages as in my data hoarding nature. I had written a script that downloads every message sent to any Telegram group with targeted individual. You may know some of them as crypto influencers, while others targeted included many investors in the space. As Telegram adoption among crypto users began to grow, it began to become increasingly difficult to monitor all of these group chats, so I stepped away for a while and let the messages continue to download and be copied to my personal server. For the most popular traders in the community, spying on them became a hobby. From personal events in their lives shared with their closest friend groups to scams and rug pulls that were created on their way to success financially and socially on Twitter, I felt like a part of it, even though I had no method to interact with them. So he's essentially saying he's just a fly on the wall, you know, watching all of this, gathering all this data while not himself or herself participating in it. I felt like, however, as they got rich, I got rich. I got myself into plenty of VC groups, and soon my entire circle of friends and those that I talked to became one and the same. I did not care in the past. Some of these people are looked up to in the ecosystem nowadays, and the thought of these individuals committing fraud would be dismissed in an instant. Some even moving on from their days of bygone scams under anonymous names with their groups of friends, while others continue to persist to this day. Artists pretending to be developers, developers pretending to be artists, those pretending to be rich, those pretending to be poor, pretending to be someone you're not. All of that was exposed to me. All of this was at the core, all of that was this community at its core when expressing themselves to the public, usually through Twitter. I do not know what it is about Telegram, but the alleged assurance of privacy and security meant that people became relaxed and let them express themselves freely. It doesn't matter to me anymore. I am dying from illnesses that are wreaking havoc on my body. I didn't read this part earlier.
Damn.
Any
Okay.
money I've made will just go on to my family and I will disappear after that, but not before this feeling of guilt is released from me. Many of individuals or projects I name will not survive this, either due to public backlash, financial fraud, or other obscure reasons such as embarrassment. Some may step down, others will yada yada. There will be confusion, there will be sadness. He goes on to lay out some of the specifics of things he's planning on releasing, dates, June 15th, June 30th. Some very, very harsh and dark allegations in here. So again, I'm not really like trying to give this credibility because I don't think it's credible at all. It's just some link that someone shared on Twitter. I literally just found it interesting and I wanted to share it with you guys. And I mean, I guess the good part about this whole thing was that these dates that he's putting out are pretty soon. He's saying June 15th, which is next week, next Wednesday. So we'll know pretty quickly is if like this guy's legit or not. You know, it's not like
I mean, do you think he's really dying?
I don't know if that
Or is
part's
that,
true. I don't
or
know
it
if
could be an excuse to put all this out at this time. You never know.
I mean, if what he's saying is true in there and he wasn't going to put it out if he wasn't dying, that'd be kind of fucked up. I'd want him to put it out whether he was dying or not.
Right.
Because if some of these people are just committing outright fraud, like out there on the open in Telegram because they think it's secure, yeah, Lord Byron, I hear you. That's why like my biggest red flag when I looked at his Twitter profile was that he had some like crypto address in his profile. So if I had to bet, I'd bet this doesn't end up happening. That doesn't end up coming out. This information, whatever. That's my gut feeling. I don't think it's legit. But if it ends up being legit, then I can say, oh yeah, I saw that, took note of it, was interested in it, and that's all it is. It's not something.
Yeah, it was on our radar and nothing came of it.
Exactly, it's on our radar. I'm gonna try to talk to the guy. You guys saw me tweet him.
Yeah,
I'm gonna try to get some more information out of him. See if he can share privately with me some of those things.
Nice.
And then
Didn't you have to use the bathroom?
I do really have to pee.
Okay. Yeah,
I can hang out
his
for a
leg
minute.
is like shaking like crazy over here.
Well, I forgot I could hit up Mitch. Mitch said hit him up. Yo, Mitch, what you doing? Wanna hop
Well,
on?
we
the
have
show?
we have
I
some
shake my leg
interviews.
even when I don't have to pee.
True.
I
Are
just shake my leg.
you just anxious all the time?
No, not at all.
Nervous about something?
No.
What are you nervous about?
Dude, I've literally like I've been shaking my leg since I was like 8. I didn't have anxiety or when I was 8.
I mean, it's linked to something.
Probably fucking like ADHD or something.
Nervous all the time.
All right, Antisocial wants to talk about.
Yeah. Yes.
Wants to talk about
It's
stocks.
Back on track. Let's pull up.
I mean, that's
Amazon.
related. That's fine. That's crypto.
Oh, I thought we were talking about the leg shaking thing.
Oh, the leg shaking. That's not really. Well, actually,
That's a little. It's a little segue. Come on,
there's
guys.
like actual like companies that make like different like biotech companies like make legit like medicines for shaky leg syndrome or whatever, restless.
Did you
leg.
hear about those like this is like obviously a tangent, but you know those like ADHD prescription companies online?
Oh, dude, I get
Yeah,
ads for those.
they're all getting shut down right now.
I'm sure they're like, oh, buy these pills for ADD, and they're not like FDA
Right.
regulated, like
It's like
drugs.
like OTC, like an anonymous doctor online
Yeah,
sending
you're
you
gonna buy.
Adderall.
You're
right?
buying some like pill called like Focus 101 or like some shit that's just like crazy.
Yeah. All right. Well, Amazon. Let's give a few zooms on that one.
This is you want to look at Amazon? Yeah, and let me know in the chat what stocks y'all are watching today. Any trades? We're looking at an hourly chart on Amazon here, so you can see that yesterday after we got this leg up after the split, got as high as 120. Well, I was gonna say $129 a share, but really the high is 128.99. So why the guy quit? Yeah, probably.
Antisocial. Why are you yelling at us, man?
I know.
He's
that's
screaming at
I know
us.
that's why he quit because of me.
Well,
but
no,
I
he's
don't-
right here.
Yeah, we still got him. Wait, hold
He's
on.
right here.
We still got him. You can't leave. Amazon got as high as about 129 a share and has since coming down. But it looks like we're finding some support here. You can see that for a couple different times throughout the day here, we've gotten below. We actually hit a low of almost 120.63. So we went all the way from 130 yesterday to 120 today. But it seems like we've been kind of just bouncing out and hanging here. And if I had to guess, I'd assume that's the case with the. I don't know. I mean, actually, the Qs are doing well right now. So that's interesting to see the Qs up, Amazon down 2%. So let's see what is driving the Qs higher. Tesla, flat. So it's not Tesla. Apple. Yep, Apple up 1.43%. The biggest weighting in the Qs. Microsoft.
How much did Apple jump after WWDC yesterday?
What is that?
They're
I'm just
basically
kidding. I know what it is. But can you explain what they announced?
so they obviously announced new proprietary chips. So they updated M2 chips up from the M1s. Obviously new software features to help everybody within the Apple ecosystem kind of just dive them deeper into that ecosystem. And then just a lot of like new product releases.
Wait,
and so
Shelly,
on.
get out. You already said you were leaving. You can't say
She
you're
came
gonna,
back for me.
You can't say you're gonna leave and come back. It's not how this works. You're in or you're out. You're either with us or against us.
She's with us.
Jim
We're chilling.
Cruz wants to look at Baba.
Baba.
Baba's
Well, there's a few stocks above that. XOM, Baba, or Logan Ross was asking for Joe. I don't even know what that ticker is. What's Joe?
St. Joe. Well, you see, this is what's great about Benzinga Pro, Aaron. I don't know what this company does either, but Benzinga Pro will tell me. The St. Joe Co.
St. Joe Co.
The St. Joe Co. is a real estate development, asset management, and operating. Boring. The company owns 170,000 acres of land in Northwest Florida. All right, that's not boring.
Joe Mama.
Owning that much land in Florida.
Wait. Who is it? What is this? R.I.P. Gilbert. What's going on?
Gilbert? Dan?
Yeah, Gilbert who?
I hope not Dan.
I hope not Dan. I hope not.
Gil.
All right, they're trolling us. They're trolling
They're
us.
trolling us?
I think someone's trolling. Tiny Pie's trolling us.
Someone's trolling us.
All right,
Anyway,
let's go.
all right, so this was all a troll. We don't actually want to
Gilbert
look at Joe.
Gottfried?
Oh, did he die?
No way.
Wait, or that happened a while ago, right? Yeah, that happened that happened April 12th, 2000. That happened like 2 months ago.
Why are you guys bringing this up now? I'm so confused. I'm so confused.
Maybe because like one of their jokes. Oh, all caps reminds me of Gilbert Godfrey, R.I.P. Okay.
It's because we were talking about.
I was so confused. I thought
We're
you guys-
so off track right now.
Yeah.
Sorry. Let's get back on track.
All right, let's get back on. We got 21 minutes left of the show left. Okay. We also haven't talked about oil and gas stocks yet, and gas prices in general. So let's check in on Chevron, CVX, see how they're all doing today. See, like these things are just so strong. They're just going up and up and up. And it's because every single day when you drive by the gas stations, gas is higher and higher. So they're just gonna be making more money.
Yes, dude.
And
God.
no one, there's all this other uncertainty when it comes to like technology. Like for 99% of the last 10 years, I feel so safe just buying Apple stock, just buying Amazon stock. Now, not so much. I'm like, oh, maybe we are going to run into...
Real quick, I'm also kind of interested. So everybody in the chat, what is the highest that you paid for gas per gallon in the last week or 2 weeks? Whenever you filled up gas.
Like $5.28.
Yeah, I feel it. So like I run premium. I'm running $6.23 a gallon on my car.
I also want to say this. I want to look when I'm talking about gas prices here. I'm talking about it in relation to these oil companies, how much money they're going to be making. We're going to be looking at their stocks. Lord Byron says I don't even look anymore. I just hang my head.
Same. I have to do the same.
And that's where I'm getting at. I'm so sick and tired and hearing about the gas prices. What are you going to do? Not put gas in your car? Walk to work? You can fill up your tank at the gas station without taking a picture of the gas pump. I promise you. It actually takes less effort to not take a picture of your gas pump than it does to take the picture.
Probably saving gas by not taking a picture.
Take your phone out and take a picture of the gas pump. And anyone out there that thinks they've spent a lot of money on gas over the last month or so.
Pony 520 premium in Dallas? Damn, that's very cheap because I'm paying $6.20.
I guarantee you that I've spent more money at the gas pump because driving home from work like a week ago or 2 weeks ago, I lost my phone at a gas station.
Yeah,
so
I
not only did I pull up and have to pay like $5 a gallon, but I lost my cell phone. So again, that's just
So Jim, you're right. Like, so I did just see recently, like, there are stories that gas might hit $10 a gallon in the West Coast. If that is the case, what's to say? Like, what's your next move, right? Like, are you gonna stop driving? You just got to eat it, or do you start considering, hey, we're gonna actually think about getting an EV vehicle for the family, cut down our costs, because if I spend the money on the EV now, I'm obviously saving money in the long run.
Yeah, Shelly, I am a boomer. When I put these glasses on, I instantly age by 30 years, and I agree. The millennials are taking too many damn pictures of their food, of their gas pumps, of their nudies. They need to stop.
Yeah, I'm really thinking about getting, you know what bike that I'm really interested in about getting? My cousin has one. You know what the Super 73s are?
No, I'm not a real bike guy.
Like, if gas ever gets to $10 a gallon, I'm getting a Super 73 for sure.
I will never...
That's ridiculous.
I will never drive or have... Well, I'd, like, drive, like, a scooter, like, fuck around on it, but I'll never, like, buy my own bike or anything. I didn't even like being on the back of Rohan's bike, driving, like, down the street to...
Rohan's got an old-ass bike.
He was going so fast! We went with, like, 35. He's saying the fastest we went was 35.
Damn.
He sped up pretty quick. We accelerated quickly.
Boosted board? Yeah, boosted boards are solid, but not everybody knows.
I also
how to
don't think I was
longboard,
wearing a helmet, and I was like sitting on the back, just like grabbing his midsection. I actually
like, hugging him tight.
So my buddy in high school got like a ninja bike. You know what that is?
Yeah, the Kawasaki Ninja.
Yeah, so it's like not a big bike.
I have a Kawasaki, but it's not a Ninja. Yeah, it's probably a 250.
It was like a small like ninja bike that's like really made for one person, and he had me ride on the back of it. Took me on the freeway. I was wearing a baseball catcher's helmet that, like, if you know a baseball catcher helmet, it's got a cage in the front, and on the back just like a like elastic thing that connects to it. So literally like the back of my head was like completely exposed with just this like elastic thing on the back of the catcher's mask. And we were going down the highway, and he rips it up to like 85, and we're in the fast lane, and people are just like staring at me like, what is this dude in a catcher's mask doing on the... I don't think I've ever been more scared in my life.
Dude, one time, so my story with the motorcycle, so what I did, I borrowed my buddy's motorcycle. It was a few years ago, and he had a 650cc, so like very fast. And I took my buddy who's never been on the back of a motorcycle before, and his parents, obviously him growing up, would be like, hey, never get on a motorcycle. I'm like, hey, you're a grown adult. Get on the back of my motorcycle. I'll take you on a ride. I take him down the freeway. I would go down like 140, I want to say.
What?
Like, we probably
on your bike?
Yeah, we probably hit like 130, 140.
No.
I scared the shit.
With someone on your bike?
Yeah, I scared the shit out of him.
I'm about to leave. I
scared the shit out of him.
Dude, you guys
sorry.
cannot... If you worked in an ER, if you worked in an ER for a week, you would never drive another motorcycle again.
Well, I'm a safe driver. I've been...
You just said you were going 130 miles an hour.
Yeah, that's kind of contradictory.
You can't say those things back to back.
Okay, that's not a safe driver, but I'm a good driver. How about that? So
Dude,
I've gone 130 many times on a motorcycle.
It's two different things, okay? But I will say, okay, 130, 140, especially with someone on your bike.
I did feel bad. I was like, hey man, I'm gonna go a little fast, and then he's like, okay. I told him like, hey, get ready, and he got ready. He was holding me very tight. And it was a straightaway, so it was no curves or anything, guys. So
Yeah, Aaron, were you in India? Was it 140 kilometers?
that's where I did learn how to ride a bike when I
Same.
was 12 years old in India. My uncle was like, "Hey, hop on the bike. We are going to ride."
Yeah,
I
no,
was
the
like,
first
"Okay,
time I
cool."
rode in India, I wasn't like going from village to village. My first time, and
Oh,
I
hell
like
no.
got stuck. The one time I got stuck because there was cows and I didn't know what to do and I got like nervous.
Yeah,
But
no,
I ran out of gas between the villages. I had to push it like a mile.
Oh my god.
But no, 140 with someone on the back, especially because like most bikes, they're set up for one rider and then you can add a second rider, but the suspension geometry
Yeah,
changes
yeah.
and stuff like that.
Definitely.
So it's like it can be sus. I mean, going in a
I'm
straight
not.
line.
I'll never go that fast on a bike again. I promise you guys. I'll say that right now on the show. You guys can hold me to it. It's just never gonna happen. That shit is scary. And I was young and dumb.
Dude, yeah, the fastest I've hit on my bike is like 105, but I have a bike from 1974. But still, like to go that fast, that'd be terrifying because it's like when you're in the zone, you can control it. But the thing is, everything is rushing past you so fast, and the second you start to second guess yourself, like what if I make a mistake?
Dude,
then you're in danger of making a mistake.
Exactly. It's all the mentality. It's all mentality. It's very, very much so all that.
That
But
and
definitely
a lot
don't
of
do
luck.
definitely don't do that anymore. You can't go 140 in India. Yeah, absolutely not. No chance. Kevin, you know your stuff. There are insane amount of potholes. There's like
Dude,
probably
dust.
5 different cars in one lane itself. So no chance. No chance.
Even in Mumbai, I went in the middle of the night, so the roads were empty, right?
Yeah.
And I was driving like a 650cc bike. If people know, like it was one of the new Royal
650 in
Enfields.
India? What?
Yeah, but it's like a 650 twin. It's not like a
Oh,
4-cylinder, but it
God.
still makes good power.
about
About
to
the same
say.
as my bike makes right now. And it's rare to have a bike that powerful in India.
Yeah,
but some
very
people
rare.
do. And my cousin just wanted to ball out, so he got a new one. So he takes me, and dude, this guy's got like a plastic bucket for a helmet. I try to put it on, and the thing's like the flaps flying up in the wind, like it's not even staying down. So I'm getting all this dust in my eye. So I was like, screw it, I'll take it off. And I'm like squinting, going like maybe like 85 down this road. And then he's like banging on the back of my shoulder. I'm like, what is he saying? And he's trying to tell me there's speed bumps coming up. And I have no
Yeah.
idea. So I got this kid on the back, and I'm just like, I see the speed bumps at the last second because there's so much dust in my eye. And I'm just
Oh
like,
my god, yeah,
like,
it's scary.
Yeah.
Honestly, if you can learn how to drive in India, you can learn. You know how to drive anywhere else. It's just so chaotic.
all right. I don't know why we're talking about motorcycles, but
Yeah, we got onto this topic, but I'm glad we did. It's kind of fun.
how's the chat doing today?
I don't know. Do you want to talk about some stocks?
Talk about stocks. What do I know about stocks? Someone
know.
told me that it's probably a good time to buy Palantir. That's all I know.
Why you say that?
Cause it's probably cheaper than you're gonna get it right now.
What did you?
Let's see what it's at right now.
Is that the only reason they told you?
Well, they said Palantir is always pretty much gonna be like a solid stock. It might not be.
I mean,
like
Palantir was like a huge stock that was very popular to our audience and community. I know Luke
it's
talked
not-
about it all the time last year. Remember?
Yeah, well, I mean, as a government contractor, like they're gonna be bringing in money. So, what's it? It's not. Is it PLTR?
PLTR.
Yeah, there we go. All right, let me see if I can pull it up on StreamYard. Here we
Should be right
go.
there.
Yeah, it's just AB's laptop, you know. Yeah. So
Nice.
what are we at right now? Freaking
I gotta zoom in on that, dude. We need some confidence monitors. like, right here.
$9. $9. Okay, yeah. I mean, it was down almost close to 5. What do you think, AB? Palantir a good buy? Get back in here.
Yeah, let's get some AB analysis.
I think it's pretty cheap right now, but
Nah, I've been bearish on Palantir for a while. I still don't like it. I still don't even know what the fuck.
Daniel
what the company
Daniel
does.
Lamb says definitely wouldn't be buying PLTR.
Yeah, I would not be buying PLTR either.
Okay.
No.
Okay. I mean,
Also, I don't know why we're wearing these. We don't need them.
I like the look.
I like hearing my own.
Yeah.
All right. I don't like hearing myself. I don't like the way my voice sounds.
I like
Why
I
is
like
that
to
that, like,
do
no
the
one
you
likes
know like
hearing their own voice.
I don't know.
There's gotta be some like psychological like reason behind that.
It's everybody thinks they sound different or
When you have no headphones on, right? When you have no headphones on, generally your voice is gonna sound like bassier than it is because you're listening to like your chestiness, like the kind of in the back ear, but you're not hearing the full range of your voice.
Okay.
When you hear it back in your ears, most people are generally gonna think, "Oh wow, I really sound like that." I've been in front of the camera for long enough where like I'm totally desensitized to it, and especially because things like the proximity effect can sound bassy.
Yeah,
or stuff like
I
that.
like doing this where like if I get up real close to the microphone, I can go a little lower. Why do I get the feeling that the last time these boys looked at stocks was when PLTR was at ATH? probably right. I don't come on here and talk about stocks often. I'm kind of like a little buffer, a little bit of fun in the day, I want to say.
Probably. Frick, there was one other thing.
Somebody wanted.
There
Wait,
was
we were just looking at what, XOM? Exxon, right?
We were looking at some oil stocks. We were just talking about gas prices.
Easy Mike is saying AERC is blowing up.
Oh, check that out. My overall thoughts on the oil and gas stocks right now are just that the trend is your friend, the strength is there, and people I think are looking around different opportunities and saying, okay, maybe investing in tech right now isn't as attractive as it was 2 years ago or 5 years ago or 10 years ago. So now they're looking at companies that are actively making a lot of money, that are paying dividends, i.e. the oil and gas companies. So you have that double effect of not only are these companies doing really well right now, but they are doing really well in an environment where other companies aren't doing well. So then you have people selling other stocks to buy these stocks. So for that reason, I am not going to sit up here and say like, oh, look how much this is up, I'm going to short it and buy puts. But
sorry,
some of these stocks are undoubtedly getting, and if they aren't yet already, if they continue to move higher, will be getting overextended. And there's like no chart in the history of time that you can look at that just continues to move up like this parabolically. So eventually we will be getting a big drawdown in these oil and gas companies. I just don't think we're going to see it anytime soon. I don't think we're going to see, in the next month or 2 months, these companies moving down a lot. But when it happens, just don't be surprised when you see like 20, 30% of value taken out of these stocks in a short period of time. Jim Cruz wants to check out PBR. Is that a beer company?
I had a PBR over the weekend. Not the greatest.
Really? I'm not a fan.
I don't like
I
beer.
like cheap beer.
I'm just not a beer fan. Not anymore, at least.
You're not a fan of beer?
Yeah, I like the seltzers. They're way easier for me. And I feel like I can drink way more and not feel like a fat poop.
I'm complete opposite. I do not like the
What are we doing?
I do not like the seltzers as much as beers.
Looks like we got a interview that we're gonna be playing.
Well, I also need to we need to do a quick crypto update.
Oh yes, okay, let's do it. You got the heat map up?
I'm pulling it up. Spencer.
Nice. All right, looks like we got to do a crypto heat map, and while AB gets the.
Honestly, I don't even know. Like, oh,
there it is. All right, we got to play the graphic like Spencer would.
All right. Well, we do that after.
Do we?
I think so.
Yeah, we know. We play it and get it up.
All right.
We didn't even play it.
Looking pretty red. You've got some specks of green in there. You got Ripple. For our good friends that aren't in the U.S., maybe you can buy some Ripple. You've got Cardano ADA up 2.5% today. Wow, it's actually very rare, I think, to see Cardano up on a day where the rest of the crypto market is down. You've got Bitcoin moving lower. You've got ETH moving lower.
What are we at? What are our price points right now?
Bitcoin, we're hanging out right below 30,000, $29,927.50. Ethereum below that $2,000 level, $1,700.82, or sorry, $1,782.91. Solana still has not recovered from when that network shut down for a few minutes a week or two ago. Dogecoin now at 8 cents after hitting highs around 65, 70 cents, now down to 8 cents. Shiba.
That was almost a year and a half ago almost.
It was May 20.
Oh, a year ago. Wow.
A year ago. Yeah. It was like when Elon Musk was going on SNL. Yep. I think it was May 8th that weekend.
Oh, yeah. I remember. That was a huge deal.
Was right around when Dogecoin was at all-time highs.
Damn.
So overall red day in the crypto market, and you know what that means? That means it is an opportunity to buy the dip, if you so please.
Yes.
And if you're looking to do that, well, I've got good news for you.
I told you played the wrong one.
I played the wrong one. Sign out the code using Zing, Z-I-N-G, and get $50 in free Bitcoin after you make a deposit of $100 or more on Voyager. Again, use the code Zing.
I actually did this, and I did get my $50, so it is legit.
Well, obviously.
I know.
Well,
I'm
you
just
don't even-
saying.
don't even-
I just
you don't
want
even-
to.
you don't
I'm
even have to
giving
s- you
the
don't even- you don't
audience
even have to say
assurance.
that. Yeah, but even by saying that, now it makes it sound like we're not legit.
No, I'm just saying. Okay, my bad. Poor choice of words. I apologize. It is real. You can get $50 for sure in free Bitcoin. Go ahead and do it. I did it. It was very easy.
All right, guys. There was one other thing that I meant to talk about today that I don't believe we got. So let me go to the YouTube description because I put some stuff in there.
How much time we got left?
We
5
got
minutes?
5 minutes.
Rohan, are we not playing that interview or no?
I'd like to play the interview. It's about 7 minutes long if you guys want to run a little
it
over.
doesn't. I mean, you'd have to talk to Roadmap guys about that. You want to cut into their show?
2 minutes.
Those
If
2
we play
minutes.
now.
And then if you haven't yet already, please smash the like. Now that Spencer's gone, I have a new boss, and my new boss specifically and almost exclusively cares about how many likes we're getting. I don't get to eat lunch until we get to 150
That's true.
likes.
I don't feed him.
I'm pretty hungry right now. So if you guys really don't mind, just go ahead and smash the like. It's completely free to do so. I'll give you a tutorial on how to smash that like.
Yeah, if you
you're
smash the like,
unsure.
I'll send you AB's lunch.
Oh, Target. Target was the other thing I want to talk about.
Dang.
All
All
right,
right, let's cover it real quick.
We've got a couple minutes to talk about Target. So essentially, if you guys have not seen, Target came out today and basically said, hey, look, we are going to do some aggressive price cutting and things like that. Throw out some good deals out there to get rid of some of this inventory. And if you were paying attention to Target's earnings report that came out a few weeks ago, then this shouldn't surprise you, because what Target said in its report, which wasn't a good report, and the stock dropped about, what did it drop? Let's check it, because we're on the daily candles right here. We can see it. Down 24%. It was down 24% on May 18th in one day. So a quarter of Target's market cap wiped out after this report. But what the CEO said was, we're still seeing a resilient consumer. The consumer mix is just different. So essentially, if you think about the goods that people were buying during COVID, right? Electronics, at-home sporting equipment, right? You want to buy some dumbbells so you can stay in shape while you're home. All these type of kind of COVID goods, Target, like everyone else, had supply chain issues. So they were trying as hard as they could to get as many of these goods as possible. And then what happened was, as time has changed and we're now getting more out of COVID, people are buying different things. And Target did not have the foresight to foresee this change in what people were buying. So now they were saying, oh yeah, we're seeing a lot of people buy like things for travel now, things like suitcases and new clothes and like all these things. And they aren't buying these consumer goods, electronics that people were buying during COVID. So basically, Target has this problem where they are way overstocked on specifically electronics. So think TVs, game consoles, computers, things like that. And what they're going to do is cut those prices down to get rid of that extra inventory. And there's good news and bad news here. The good news is that people are still buying things from Target. It's not like people stopped coming in and people stopped spending money. You can look at the report. You can look at what the
I
executives
bought
were
something
saying.
from Target 2 days ago.
You went to Target 2 days ago?
Yeah.
Yeah, I mean, shit, I'm still buying. Oh, you know what I did the other night for the first time ever? I bought something off Instagram.
What? How'd that go?
Well, you know, like when you're on Instagram and you get like ads?
Yeah, yeah.
I bought a t-shirt off Instagram.
What kind of t-shirt?
It was like a vintage, like Grateful Dead.
When's it gonna come in?
I don't know. It's a great question.
All right, you'll wear it on stream, so we'll see.
I'll
when
wear
you
it
get
on stream.
Yeah.
Actually, but then see, here's what they got me is I really wanted a t-shirt and it was like $35, and then they were like, "Oh, spend $100 and you get free shipping."
Did you spend the 100?
Yeah.
What?
I was like, "That's a great deal."
What?
Free
No, they
shipping.
got you.
I know they got me.
There's
And then also the t-shirt that I really wanted at the race. So the race, the Detroit Grand Prix IndyCar race, has been at Belle Isle, which is an island right off Detroit, for the past like 25 years.
we'll have a cool video
And
coming about that.
It used to be on the streets of Detroit, and then it was on Belle Isle on this track for like 25 years.
It's
and now
moving.
they're-
It's moving to street circuit next year, I think.
Yeah, I know. Now they're moving it back to the streets. So someone had this shirt that said Belle Isle. It's been grand, like a play on like Grand Prix. It's been grand, like having it on Belle Isle. And I really liked the shirt, and I wanted to buy it, and they were sold out there. But the guy gave me the website. It was on this Made in Detroit site.
How much?
$40 for a freaking t-shirt.
Bro, didn't you have a VIP pass? Couldn't you just ask for a free ticket or a free t-shirt?
I don't know, man. All right, but anyway, thoughts on Target is I don't think this news is like that huge of a deal that they said today, because they're basically like confirming what we already knew from a couple weeks ago, that they are oversupplied on inventory in a few different categories. But the flip side to that is you got to pay attention to the fact that like Microsoft, Target have both now come out in the last couple weeks and given these warnings saying, yeah, our margins aren't going to be as great. We're not going to be making as much money. Microsoft kind of blamed it on Forex exchanges, which to me is kind of bullshit. And then Target is blaming it on like this inventory problem. So either way, just the fact that two of the biggest companies in the country, Target and Microsoft, are giving these warnings is a little bit, it's just something I think you have to pay attention to. I'm not like sounding the alarm saying, oh my God, the market's crashing, but I do think it's a little bit interesting, something to keep an eye out for. And yeah, Kevin, I know it.
$40, that's like commonplace in America though, right?
For like a souvenir t-shirt like
Yeah.
that. Like if you go to a concert and you want to buy a t-shirt from the concert, it's probably gonna be like $50.
But that one's more, I guess, I mean, because like when you spend the $40 on a concert t-shirt, that $40 goes straight to the artist, right? So like that one, that you could justify spending that much money on something because you're supporting someone in that manner. This is buying like an event t-shirt that the proceeds are just going to go back into the event, which they already made a bunch of money. So I don't know.
All right, guys, 2:00.
2:00. Yep.
Love you guys. We'll be back tomorrow.
2:01.
2:01. We'll be back tomorrow. Smash like if you haven't already. Stay green, stay clean. Call your mom.
Very nice.
Do something good. Do something good today. Do something good for the rest of the afternoon. Something.
Yes.
I'm gonna ask. We'll do a quiz in the chat tomorrow. We'll see what your good deed was. Today, when I was walking in the office, there was a piece of trash on the ground in the parking lot. I picked it up and threw it away.
Today, I was walking to the bathroom, and it was during lunchtime, and someone was sitting at a table with their friends. His phone was on the ground. I walked 4 steps ahead, and I'm like, wait a second. I could just solve this real quick and be like, hey, man, you dropped your phone. And that's what I did. So I walked back another 4 steps, and I was like, excuse me, sir, you dropped your phone. He's like, hey, thank you, man. Appreciate that. And I just went back to the bathroom.
Nice.
So-
That reminds me, just real quick, last thing. I was at a concert a couple weekends ago in Chicago, and I was walking by.
Wait, wasn't it the Flume?
Flume?
Yeah, nice.
I was kind of,
Yeah.
And I was walking like to the bathroom to grab a beer or something, and this chick like dropped her key fob to her apartment.
Ooh,
But I was like super like fucked up kind of. So like
that
the
would have
first
been
thing
a big
the
L.
first thing I did was while I was walking by it, she literally like dropped it while I was walking by. I just like when you're like walking down the street and you like kick a rock or like, a bottle cap, I kicked it, and then like I kept walking and I get back to it and I was like, oh wait, that's a key fob to an apartment. So then I had to pick it up and walk it all the way back to where it was, and she had no clue she dropped it, and she was like so thankful, and I was just like, yeah, no problem, and like ran out of there.
Have you ever done that where like you give someone something that they obviously like is very important to them, and they out of the blue just probably hand you like $5 or something like that? Yeah.
Oh yeah, totally.
It's always on it. It's not like you expected, but always super nice. Makes it worth it for sure.
All right, time for the roadmap. They have a great show coming up.
Thanks, guys.
Yep.
Oh, well, yep.
Yep.